All right, all right. Ladies and gentlemen, welcome here to the session. My name is Rodrigo. We're going to be here with Chief Market Strategist Matt Maley, lead trader, educator, mentor, guider at the Stock Picks Inner Circle chat. That's where he just came off right now. Matt is basically live Monday to Friday from 9 a.m. till 5 p.m., whipping out trades. Overall, right, in the current markets. A lot of you guys have already seen him on CNBC or Bloomberg or any of these other places. He's always on the news, but he's got a live trading room, and you guys will have the chance to take a look at it today. I want to give a quick shout out here. We got Barry Diamond in the house, Bum Trader, what's up? CJ, Cosper, Hemmings, Israel, J Sweet, Ray, Trigger. All right, so we got a packed house here. Folks, give me a 1 in the chat. On the Zoom chat, if you've already been, give me a 1 in the chat if this is your first time in one of these sessions. Give me a 2 in the chat if you've already been in this session. That way we know where to take the conversation. But to give you a little bit of a roundup while you guys put in your numbers there, Deborah, I hope you're doing good, Deborah. Listen, so we will be talking about trade ideas, options education, setups, strategies. We're going to talk about the Matt Maley strategy. If you're not aware, Matt Maley has the highest record percentage win on record here at Benzinga. It's like a 8,000% call that he got. And we're going to show you Matt Maley's strategy, how he uses it. He has 40 years in Wall Street. So, and if you do want to trade with him, you can join the group. Anybody can join. We got people from all over the world. All right. So let's go ahead. I think that we have Matt Maley there in the back somewhere. That's what I'm hearing. Let me go ahead and just make sure that Matt's good to go so that we can bring him on here. Matt Maley, Chief Market Strategist at Miller Tabak, lead trader at the Stock Picks Inner Circle chat.
Damn, son, where'd you find this?
All right, Matt, can you hear me?
I can. Can you see me though?
Yeah, we can see you. Well, not anymore. Now
okay, how about now?
Good.
Okay, good. Great. Sorry about that.
Yeah, Matt. So listen, we got a lot to talk about, man. Every time we do these sessions, it's great. We learn a lot. I learn a lot. And, you get a chance to connect here with your hundreds of members that you have from your live room. But for those that are watching for the first time, because we do have a lot of ones in the chat, if you can give us a brief intro of your background. I already know you've been in Wall Street for 40 years, but just for the people that are watching for the first time, and then we can go ahead and start showing them not just the trades that you've been making with your strategy, but also, how they can be part of it as well.
Right. Yeah, Rodrigo. That's just, a quick background. I started on Wall Street just over 40 years ago. It seems like yesterday in many ways. But I'm as Rodrigo also mentioned, I'm the Chief Market Strategist at Miller Tabak, and also do a lot of work here as strategy work at Benzinga, and along with this chat room that we do, and it's worked out really well. But the big thing that differentiates me from a lot of the other strategists on Wall Street is my background is completely different than pretty much all of them. Most of the people were either analysts or were economists in their previous years. And it's just not the kind of, I shouldn't, that we need that fundamental backdrop. But I spent the first 25 years of my career on trading desk. The first 15 were at Salomon Brothers. If you're younger, you may not be real familiar with them, but the book Liar's Poker, one of the most famous books about Wall Street, which I've ever written, was about Salomon Brothers, which was the most important trading desk, most powerful trading desk on Wall Street in the 70s, 1980s, and 1990s. I was there for 15 years in the 80s and 90s, and then moved to Merrill Lynch, which was the biggest trading desk, and certainly one of the most powerful ones on Wall Street for another 10 years, almost 10 years anyway. And so a total of 25. And in that, in that time, I learned what really makes the market tick, not what should happen in the marketplace, what should theoretically happen. We learned about, because when you're trading, I traded covering the trading desks of the biggest institutions in the world, the biggest mutual fund in the world, the biggest hedge fund in the world, BlackRock, the biggest mutual fund being Fidelity, some of the biggest banks and insurance companies, pension funds, etc. And you learn you don't worry about what should happen. We worry about what is happening and what is going to happen in the near future, rather than what theoretically should happen 5 years from now. Now, again, we always want to know what the fundamental backdrop is, but we also want to know what the technical situation is, what the sentiment indicators are, what the positioning is, because we all want to have that long-term bucket of investments where we're thinking, for those who are really young, you want something that's, goes out maybe even 25, 30 years. For other people, maybe that's just 5 to 10 years. But, for those who want to, take into a full account of all the opportunities and have the time and inclination to do so, you want to have those shorter term trading, active trading opportunities. And that's something that I've worked really well. I've worked really well at some of these long-term trades. I mean, for instance, we talked back in October of 2020, just over 2 years ago, where I went wildly bullish on the energy stocks. Everybody on Wall Street was telling me I was crazy, and yet I was pounding the table saying it was a great time to buy. Everybody else jumped on the bandwagon 4 months later. They missed half the move, and so they say, well, geez, they were late and they still had a great year. I mean, geez, they're all patting themselves on the back because they caught the 50 to 60% move. But when we got in, that's 120% move. And so this is the type of thing that we try to take care of on a long-term basis, but also on a shorter-term basis, whether it be swing trades that go for a couple of weeks or maybe just a few days, and even shorter-term trades than that, where we take advantage of key turning points in the marketplace. And it's worked out really, really well. I mean, let's face it, this is one of the worst years on Wall Street, certainly the worst year since the great financial crisis. And yet we've had a year where we've made some very, very nice profits, extremely nice profits, in a year, like I said, it's been a year where people are down 20, 30% or even more, depending on what their portfolios look like. Well, we're up quite nicely on the year because in the trading part of the account, and on the longer term things, we're actually up on that as well because we own the energy stocks and I was in cash in most of those names. I mean, I guess the difference from what I do and what everybody else did was what happened this time last year. I was pounding the table this time last year saying what the Fed was doing was going to cause a deep recession. I'm sorry, take that back. Was going to cause a deep correction and a significant slowdown in the economy. I became more bearish after a couple months later, in early this year, 2000. When Russia invaded Ukraine, I switched that to being a deep correction, down 18 to 20%. To a full bear market, and for calling for a slowdown to calling for a recession. Obviously, the bear market certainly played out. I think we're headed for a recession. The thing is, the vast majority of the people on Wall Street were saying just the opposite, saying, don't worry, worst case scenario, down 5 to 7%, and then it would go down 10%. They said, oh, don't worry, it'll only be down 12%. 4 or 5 times they kept adjusting. And that's what people on Wall Street I'm sorry to say, most of them are paid to do. They're paid to be bullish, keep you happy or keep you thinking that everything's going to be fine. And what I'm paid to do is help people do whatever, no matter where the market's going. The market's going down, the market's going up, we can benefit. And the biggest thing right now is that what's happened in the last decade, and really in the last 5 years, is that we have the tools now to do it. In the old days, it was only the big institutional players that had those over-the-counter options that they could play, daily, weekly options. Those didn't exist for individual traders. We only had quarterly options. So if you wanted to make a short-term bet for the next few days or the next few weeks, you still had to pay out to look at options that went out 3 or 4, at least 2, maybe 3 months into the future. That gets very, very expensive because you're paying that time value. And if the market didn't move immediately, you just were paying through the nose. Now we have weekly options on all the major stocks. We have everyday options on the indices. We have ETFs. We have inverse ETFs. We have leveraged ETFs. We have options on all those ETFs, and it enables us to take advantage of these moves in a way that only the institutions could do up until just a few years ago. Yes, these tools were out there a decade ago, but they weren't very liquid. Now they're liquid, and we've been able to take advantage of it. And it's not just individual stocks. We've really made some nice money. I mean, today, a person made 75% just on the Tesla puts. A person in the chat room. We've also made money. Taiwan Semiconductor. We bought puts late last week. We made over 300%. Some people made. I think mine actually made about 270% but other people made a little bit more than 300%, and even I think one person was even 400%. But not just individual stocks. We do it on groups, whether it be the tech stocks and the SMH, which is the semiconductor stock ETF, or the XLE, the tech stock ETF, or the KB, the bank stocks, et cetera. We can make those bets in the options market because of those ETFs. And then, of course, on the broad markets where we play in the SPYs and the QQQs and some of the leverage ETFs in these indices, again, the things that have worked very, very profitably for us this year on a very consistent basis. Every month, I can show you examples from every month of this year. We've made some real nice profits, and it's not just in the stock market. We've been able to do it in the commodities market. We've been able to do it in the bond market. We've been able to do it in the commodities. It's not just like oil. We've been able to do it in gold and gold stocks, wheat of all places. We've made it in international equity markets. We make it in the bond markets, high yield market, et cetera. Because these tools are available to us, we can take advantage of whatever seems to be working at the time. You don't have to just look, and look at a few, in 2021, if you concentrated on 6 meme stocks, you did really, really well. Well, that's fine, but those things have gone long. Those opportunities have long since passed. And now we don't want to just focus. Sure, do we want to focus on Tesla and Apple and Microsoft and some of those names? Sure, but at the same time, we want to look at everything, because that's when you really find the big examples. We made money on Chinese stock ETF, and like I said, the wheat ETF, on 700% trade on the leveraged ETF on the biotech stocks. So these are the types of things that we try to do here. And again, from my trading background, that's when I've been able to look at, instead of focusing on what should happen 2 or 3 weeks from now, or 2 or 3 months from now, or 2 or 3 years from now, I'm focused on what is happening, what is likely to happen. And that's why I was able to capture this bear market and profit in it, while most people on Wall Street were whistling past the graveyard. Sorry to ramble on like that, Rodrigo, but it's just, well, the reason why I really highlight this is I think next year is going to be another challenging year, and you get these perma bulls that say, "Oh, you rarely have 2 years where the market goes down in a row." Well, that's fine, and maybe by the end of next year the market will bounce back. But we got a lot more, and we'll talk about why I think that a lot more volatility to deal with in 2023, and it's going to make it another, I think, very profitable year for us.
Yeah, I mean, I've been following you for about 2 years, ever since we launched this chat room, you and I, Matt, which was about over a year ago now. And you've always taken care of the members. It's always been like, guys, I think there's a correction coming. Try to go light on stocks, try to go, if you can, on cash, so you can make money on the way down, and maybe buy some, add to some long-term investments, things like that. So you've also kept your point of view throughout all this time. Especially when everybody in the media was saying one thing, you were saying what you're still saying, and you've been right all along. So that's great for the members. Obviously, the thing, Matt, is that you don't sugarcoat things, and obviously you're here to help the members, right? This is really the main goal, to help them become better traders.
Right. I mean, that's the whole point. I mean, don't get me wrong. When you have a financial advisor and they're looking at your 30-year portfolio, that's fine. And we do talk about that. We do talk about long-term opportunities, and there's going to be some great ones when this market finally bottoms. But the problem with them is they're thinking, well, geez, 10 years from now, everything's going to be fine. Well, that's fine. But when you go through a decline, well, why not avoid it? Why not raise some cash? I didn't say sell every single one of your stocks. I said raise some cash. In fact, I said this time last year, I said add to your energy stocks. I wasn't a complete, I'm not a perma bear saying, oh my gosh, you got to sell everything and hide under a rock. We stayed with the energy stocks, even though we had been bullish with them for over a year. We stayed with them through the first half of the year. So not only did we avoid getting clocked by the tech stocks and other areas of the market, we profited from the energy stocks. And then when they started to top out, we actually took advantage of that. We bought puts on the XLE energy ETF, and then later on, a couple of weeks later, we bought calls. So there are ways to make money on both sides of the marketplace. if you're willing to use the tools that are available to us. The buy and hold strategy, that old strategy that worked very, very well for a long time, is not going to be a good one. Hasn't been one this year. I don't think it's going to be a good one for a while until the market actually becomes cheap. Just because the stock market has fallen a lot does not mean it's cheap. There was a guy today on Bloomberg TV. I was on Bloomberg TV this morning about 8 o'clock and interviewed. And just before me, a gentleman came on, a well-known technology analyst. He's been bullish on the group all year long. He's done very, very well over the years, but this year, obviously, he's been wrong. That's okay. We're all wrong sometimes. But he was trying to tell people that the group is oversold. I'm like, buddy, you're a fundamental analyst. There are some fundamental analysts who follow the technicals very well. He's not one of them, because he was trying to say that the tech group is oversold. It's not oversold on a short-term basis, an intermediate-term basis, or a long-term basis. This guy was just wrong about that. Could he be right that these stocks are going to, certain stocks that he's following are going to be good next year? Maybe they are. But to say that they're oversold was just ridiculous. And I showed why today in the chat room. But the fact of the matter is, we want to be taking advantage of these situations, of these anomalies that are taking place in the market. This is an historic change by the Fed. The Fed came in 2020 and saved the system from collapse when the entire global economy had basically shut down, and they flooded the system with liquidity. Now they're having to unwind that liquidity, and therefore we have to de-risk and deleverage the marketplace. That's going to take a couple of years. You don't do that in a massive amount of liquidity. I mean, let's face it, we'd already been adding liquidity for a decade, and then on top of that, we piled in a major way for 2 more years, or a year and a half more. Now they're trying to unwind that. Everybody talks about the Fed trying to fight inflation. Yes, that's true. But another important part of that is they are trying to get the markets back in balance with the underlying fundamentals. That's going to take more than a year. We're only a year into it. It's probably going to take at least another year, certainly another 6 months. And hey, let's take advantage of it. We've been doing that this year, and I think we're going to continue to do that. And sitting back and saying, oh, 60-40, be 60% bonds, and don't worry, such and such a stock will come all the way back. Again, you want certain important things. Do you want to sit there and sell 100% of your Apple? No. But I'll tell you, at the beginning of the year, I was saying, if you own Apple, hold on to some of it, but sell a chunk of it, take some chips off the table. And then under that, we'll talk about a little bit more in a while. But Microsoft, last Thanksgiving, I was pounding the table telling people to get out of it. People in this chat room sold 100. There was one guy who sold 100% of his Microsoft holdings. Guess what? The stock dropped over 30% since then. So it worked out very, very well. So again, we're looking at, we're not sugarcoating anything. This is a tough time in the marketplace. We're not going to tell you that just sit back and buy and hold. That's not going to be a good strategy with everything right now. Do you want to buy certain, hold certain names? Yes. And Google is actually getting cheap right now. Okay. But certain other stocks are not. And just because they're down a lot does not make them great buys. And we want to be able to take advantage of it, continue to take advantage of it, just like we did throughout 2022.
Yeah, no, and look, we're going to cover a lot of things I have, laid down here. China, Taiwan, lockdowns, Fed, crypto, housing, inflation. I got a lot of things we're going to cover, Matt. But in the meantime, everybody wants to see these trades that you're talking about. And maybe you can walk us through the mindset, right? Because you've been a trader and an analyst. That those two typically don't go hand in hand. So maybe you can give us a little bit of insight into the Matt Maley strategy and what's going on in your head when you make these trades.
Well, I'd say we'll combine a couple of it. Let me share my screen here. Hold on. I'm sorry. Okay. Let me just pull this up a second. Hold on. Okay. Sorry about that. Okay. I thought I had it up, but not sure. Can you see it okay there? My screen started to fill in for you.
Yeah, you want to make it full screen if you want.
I'll do that in just a second. I just want to make sure I get to the right slide first, which only take me a second. It's filtering in there. There it goes. There it goes. I mean, I'll give you an example of just what happened, combining a bunch of different things. What happened last spring, and we're talking about cryptocurrencies. Bang, there we go. And let me give you the whole, so you can see it throughout the whole thing. Okay, there we go. Apple Computer. This is what happened last May. we saw what was happening in the cryptocurrency market, right? It started to, well, one of its first, I would say not first, one of its several crashes. It was really getting hit hard in late April, and then it fell out of bed in May. And I'd been negative on the cryptocurrency market at the time. And I was saying, watch out. It was dropping from 50,000 down to 40,000. Of course, it's fallen a lot more since then. But the point was, it was just going down every single day. Then it went from 50 to 40. Now it was dropping towards 30. And people are asking, should we buy crypto? I said, no, it's not oversold yet. We got to wait. We got to let things wash out. And then all of a sudden, I noticed also that even though the stock market was going down along with the crypto market, it was not going down anywhere near as badly. And why? Well, a simple reason. There was forced selling going on. There were margin calls. All these people in the cryptocurrency markets were getting margin calls. The problem is those markets were not liquid enough to handle those margin calls. So when people said, hey, you've got to add more money, either add more money or sell your cryptocurrency because you're getting a margin call. And so the people would turn and try to sell their Dogecoins or other things. Even Bitcoin wasn't liquid enough for people to sell enough of those cryptos to meet their margin calls. So they had to turn and sell something else. And I was noticing how Apple Computer had fallen 10 cents wouldn't mean anything, 10% in just a week. Wait a minute. Apple's down 10%. The market's really not doing that badly. It's down a little bit. The stock market, that is. It's not down that much. And yet there's no new news. There's no negative news out. What the heck is going on with Apple Computer? And then it dawned on me, because I had seen it before. My 40 years of experience, the margin calls, I saw it in the late 1990s when long-term capital management went under. I saw it during the great financial crisis, when illiquid markets see a massive selling, and like I said, they can't raise enough money to meet their margin calls. They sell what they can sell. And I said, well, what would these guys in the cryptocurrency market own? Well, they wouldn't own General Motors. They'd own Apple, right? So I said, that's the reason. There's no fundamental reason for this decline in Apple Computer. We got some negative news later in the year, but not at that time. So if the stock is down 10%, and cryptocurrency is getting crushed, and all of a sudden on May, see down here, you can see May 12th, May 13th, it was actually on May 11th. I noticed that the cryptocurrency market kind of stabilized late in the day that day. And sure enough, on the 12th, it's traded sideways. And I go, the forced selling is done. And I told people, if you want to buy, at least for a flip, if you want to buy some of these cryptocurrencies, you can take a look at them now. But what I'm going to go for, instead of buying the cryptocurrencies, which were obviously very risky at the time, I said, I'm going for Apple Computer. So because not only did the cryptocurrencies not go down that day, Apple did. And I realized, the momentum was down so much that the people were still trying to raise a little bit of money by selling Apple. And I said, okay, we're going to use my trading expertise. First of all, the stock's oversold on a technical basis. Sentiment has gotten too bearish on the cryptocurrencies. This stock has got a bottom. So late in the day, and just after 3 o'clock, we came in and we bought the Apple May 13th $143 call options. Okay, and this is what we do in the chat room. We don't sit there and say, hey, Apple's oversold, you ought to look at the options. We come in and we say, this is the exact option you should buy. This is the exact strike price. This is the exact expiration date. These are the ones we want to look at. So we bought it on the 12th. It didn't expire. Okay, expired on the 13th. Okay, so it was a very short dated one, but I knew that the selling was basically over. So we made 400%, over 400% within the next morning. Okay, now I didn't buy it at the exact low. If I had held on a little bit longer, I would have sold them for a little bit more. I want to be honest. I want to show. I don't want to, I could have just showed where I bought them and stopped it where I sold them to say, hey, I was perfect. Not perfect. If you beat yourself up for missing the last, and getting 415% instead of 440%, you shouldn't be doing this because you're going to drive yourself nuts. If you make over 400% on something and you didn't get the exact maximum, you believe me, you'll drive yourself crazy. It doesn't work that way. You take that profit and you move on. So that was a great example where I looked at what's going on in one market. I went to the stock market. What's going to work in the stock market? We thought about going and buying some cryptos, And I said, nope, I'm going to stay away from that. It's too risky for me. Apple Computer. And besides, the stock was oversold. So worst case scenario, the stock's going to bounce on its own for no other reason. But again, 440%. And then let's just go for another example. We might as well go back to the record one we had that Rodrigo talked about, was one where we made over 8,000%. And again, this goes into a different market. And instead of, believe me, and I'll show you plenty of examples where we made money in the U.S. stock market. But here was an example where the FXI, which is China's, the ETF for China's stock market, and it was becoming incredibly oversold. This thing says last week's chart. That's only because you can see I did the chart in March. It's not last week's chart. It was in March, but you can still, everything else is accurate here. It's the FXI China Large Cap ETF. And looking at the RSI, which is the relative strength index. And before I move on, I just want to say one other thing real quickly, and we'll talk about it a little bit more further. Is one of the big things that we try to talk about a lot is education, teaching people, what the hell is an RSI? What does that mean? After a while, everybody kind of gets to know it very, very, very easily. And but we're constantly trying to show people why we're doing stuff so they can learn to come up with opportunities on their own. People all the time in the chat room saying, hey, Matt, you mentioned that the Bollinger Bands chart is a good one to watch. Well, look at the Bollinger Bands on Microsoft. It's way overbought. I didn't notice that. Thanks a lot. Hey, yeah, that's a great one. Let's look at the Microsoft puts here. Something like that, where people can learn from themselves and not just say, hey, Matt Maley said buy this call or buy this put or buy this common stock, whatever. It's like, I can look at this stuff and look for some of my own opportunities. And I'm telling you, some of the best ones we've had have come from not just me, but from other people in the chat room. But this situation was, again, China fundamentally, and remember what happened in 2020 when they came, 2021, US stock market was going up, but China was going down because they were just hammering each one of their industries. They started with Jack Ma and hammering the retail industry, then they went to the education industry, they went to the gaming industry, et cetera, et cetera. Every single month they come in and crack down, and the markets just started getting hit. But they were the ones who knocked it down. They had no problem with that. But then all of a sudden, at the beginning of this year, just after the beginning of this year, the U.S. came in and said, "Hey, we're gonna start. We're thinking about delisting some of these China stocks," and they just fell out of bed. And then they became ridiculously oversold. And what it was is that I looked at it and I go, okay, I'm looking at an RSI chart. Again, this RSI, see that green line? When it gets down to 30, whenever stock gets down to 30, or especially if it gets a little below it, means it's very oversold. That's why the line's green. There's a green, go ahead, buy. Green light, buy. When it gets up to 70, especially if it gets slightly over 70, that means stop. So it's a red line. Stop. Don't buy anymore here. Okay. But see how it got oversold there, right there. Look how it popped on a short-term basis. See how it got oversold there? See how the stock popped on. These are not small pops either. It's over 10% moves. Okay. Oversold here. Nice little pop, about 8 or 9% move. Now, but look how ridiculously oversold this got. It got the most oversold ever, okay, by a long shot. You rarely see anything get down below 15. This got below 15, and I said, all right, this is the time to buy. And so I used that technical analysis, but I also used my experience knowing that how China does things. They can manipulate their market to a large degree, and if they do it in a negative way to suit their own long-term purposes, that's fine. But they don't like it when the U.S. does it, and the U.S. was the reason it got clocked down. I knew they would come in and support their market and go in and actually buy stocks immediately. So I came in the next day and I said, well, sure enough, that day I'll show you what I did in a minute. But you can see what happened the next day. The whole market, the China's market rallied 27%. That would be like the S&P, the Dow Jones Industrial Average, rising 27% in one day. And so here is what we did. On March 15th, remember I said, you can see in here, whoops, sorry. See here, this was March 14th, or March 15th, I'm sorry. See how oversold it was? Well, that day we came in and we bought the FXI, March 18th, $30 calls. Now we bought them on the 15th. That's why it's like, wait a minute, is it March 18th or March 15th? Well, March 18th is the strike price. These are the days we traded it. Late in the day on the 15th, we came in and bought those calls. And sure enough, the next day, these call options opened up 1,000%. Usually anything's up 1,000%. I'm like, let's just take our profits and and move on because 1,000% is unbelievable. But I knew that they would support their market. I knew they would keep buying. I knew that the rally would not just last, a couple hours. Remember, we'd seen that, the year before, all those meme stocks, sometimes they'd be up for, they'd open up, 30% in the morning, and 2 hours later it was down. It was down on the day. I knew that wouldn't happen. So I used technical analysis. I used my experience knowing what's going on in China, and we held on to them when it opened. But then they got up almost 3,000%. And I said, oh my gosh, we got to sell something. But I said, listen, I think the Chinese government's going to push this market even higher, but we have to sell something. So we sold half of our profits, basically up 3,000%, 2,950. And then as the day went on, it just went higher and higher and higher. Finally, at the end of the day, I said, okay, these things are up 8,000%. Let's sell the other, or almost 8,000%. Let's sell the other half. It's going to be a return of over 5,000% on the whole thing. Let's just take our money and run. I did say, listen, I think it could still go higher, but up 8,000% in one day, we just can't take that chance. And again, this is what we made. This is what I did. Other people held on to their the next day and for a day or two and made as much as I think 11,000%, as one person said. I can't take credit for that because I did sell when it was up my balance was up 8,000%. But this is what we did. And again, we're look outside the box. Everybody's hearing, oh, we got to think outside the box and all that. But I mean, how many people were looking at everybody's trying to look at meme stocks. Is AMC going to do okay? And I'm looking at some, extraordinary, oops, sorry here. Let me just see here. Hold on. Oh, I can't seem to get up. Oh, there we go. Okay. So it just gives you a better idea of what, why is that? There we go. Okay. Of what we do. I just to give you another, I'll give you another great example here. What we did in, let's see, 90. Okay.
Nick,
Go
hey,
ahead.
Matt, Tim is asking here, in every trade, you put an entry and an exit, right? So all the
That's right.
trades, it's not like, I feel like we're going up, like buy this call, this strike price, and I'm doing it right now, correct?
Right. And there are times I will also say, listen, this thing's up 100%. And usually when you're up 100%, you want to take, if you sell half, you're all set, right? You sell half up 100%, that means you've covered your entire exposure. So if you sold half, now you still own half and you've got gravy. Everything else, if it for some reason in the next 10 seconds it drops to zero, you've sold half up 100%. That's all, you've automatically made back what you put in. You cannot lose money. So it's good to, again, we want to use risk management, and that's why I sold, even though I said, geez, Matt, if you thought it was going a lot higher, why did you sell half? Why didn't you just hold on? Well, that's easy to say now. But it's just something, a situation where if you sell part of it, you do risk management. And that's part of the thing. So we talked a little bit before I go on to this next example. I just say that we have a thing we did today, of course, today's Tuesday. Every Tuesday, we have a Zoom call. It's kind of like this. It goes on for about, anywhere from, sometimes a half hour, but usually 45 minutes to an hour, at 11:30 every Tuesday morning Eastern time. And we just talk about what's going on. We talk about certain ideas, talk about the macro issues, look at any kind of new news, how's that going to affect the marketplace. And then again, maybe look at, not just look at ideas that we might be thinking about doing, but trades we already have on. Hey, do we want to hold this? We want to let it ride, etc. And we do that every Tuesday. But again, this goes to the thing where people, more educational things. And why are you doing these things? So I can learn how to do them on my own as well. I mean, that's really the biggest thing. And we want everybody to be able to learn together. People in the chat room are very, very helpful. If I'm not on the chat site for whatever reason, I have to go to the bathroom, whatever. People are more than willing to answer questions and help people. People help each other all the time. And the thing that it goes back to is that maybe the biggest thing you can remember is that when you're trading actively, think about what these really, really big hedge funds do. They go out and they have traders. Some of these big hedge funds have dozens of traders. Others are pretty big hedge funds who keep themselves on the smaller side. Maybe they only have 4 or 5 traders, but they still are big and powerful because they run a decent amount of money. But no matter what it is, even if it's a big guy with dozens of traders or just one with us, 3, 4, or 5 traders, they're talking to each other all day long. And guess what? They have brokers from all over Wall Street calling them all day long. They don't have just one broker. It's like they don't TD Ameritrade or Merrill Lynch or Morgan Stanley. All of them are covered by Morgan Stanley, by 50 brokers, and they're calling them all day long saying, have you seen this? What do you think of this idea? Did you hear this news about that? Watch out for this. The stock's doing really well, but look out. There's some, stories going around about this. Whatever it might happen to be, they are getting input all day long. These are the best, most experienced traders on Wall Street. If they're getting that kind of feedback during the day, how in the world are you going to do it by yourself? Okay, these guys don't do it by themselves. They're the best of the best, and they're getting as much input as they can. And that's why we like to do the same thing. It's how you can try to even the playing field, at least to a certain degree, with what those really smart guys are doing, and really experienced guys are doing. And like I said, they don't take every idea and do it. There's a lot of people who just say, Matt, that's an interesting idea. I'm not going to play it this time. That's fine. You shouldn't take every idea I get put forward. And there'd be some ideas where I'll say, hey, I don't like that idea, but if you really like it for whatever reason, go ahead and play it. I'm not your financial advisor, but hopefully I can help you, and people in the chat room can help you do your trade, not trade alone. It's so hard to do. The pros don't do it. Why would you? So sorry to get off on that tangent, but that just gives you, I think, a good feel for what we're trying to do. Here's another one. I won't bore you with too many ones. We'll go back to I saw you one showed you one on just Apple Computer, one on a different in a different market with China's market. LABU. This is the leveraged ETF for the biotech stocks. I saw that the IBB biotech ETF had become very oversold, and I thought it was getting really ripe for a bounce. Well, sure enough, we bought the August 5th $10 calls late one day. By midday the next day, they were up 850%. Now, I wish I could say we have 850% gainers every single day. We don't, but we get them on almost a weekly basis, where we get multiple 100% gains, and that's the whole idea in the options market. Get out of your losers quickly, or keep them small. A lot of times, what was it? I lost almost 100% on some Tesla calls that I bought late last week, but I put almost no money in it. I just said, hey, if this thing starts to go on my way, I'll start adding to it. But it didn't. It went against me. It was like, it was barely, I already had some nice profits last week. I put a tiny amount. I said, I'm going to do a lottery ticket here. I'm probably going to lose it. I don't care. But again, that's risk management. If I had full confidence in it, I would have had a much tighter stop. And as soon as it dropped 10 or 20%, I would have said, okay, I'm out. In this case, it's like, so if I lose $50, what do I care? I already had made quite a bit of money in several other trades last week. Right. In fact, I'll give you a great example of this. What we did last week. Going to my Bloomberg here. Those were just some Bloomberg screens that I printed out, or I saved, I should say. Here's one. Taiwan Semiconductor. Last week, we had Micron. Micron Technologies was going to be reporting earnings. And I said, okay, Micron was already, I'm worried about Micron, but the stock was already getting hit. And I thought, hold on here, let me just blow it up so we can see it a little bit better. So many lines on here, it's hard to see. This purple line is the 200-day moving average. Not that that matters that much, but let's blow it up so we can see. So what happened here, see right here, is the stock started rallying, right going in. Let me even blow it up more so you can see it better. See how this stock, see this little move here? That doesn't seem like much of a move. But I knew that Micron Semiconductor, there's a good chance it might report poor earnings. That's a 3% move in one day, okay? And I was thinking, this stock, it's the most important, it's the biggest weighting in the semiconductor area, the chip stocks. And if Micron reports a lousy, some poor earnings, Taiwan Semiconductor is going to get hit. And sure enough, bang, it dropped 4%. Say, well, 4%, okay. But we went out and bought, okay, the $74 puts I made 280% on my puts. Other people held on to them a little bit longer and made over 300%. That was last week. So I don't want to just, I'm showing you things from earlier in the year, and I can give you a gazillion examples. I just don't want to bore you to death by showing you a million examples. But here was a situation where we made 300% just a couple of days ago. And this is, the kind of the opportunities we're looking at. Well, wait a minute. Usually I'm not looking, 3 or 4% look, but there was a specific item coming up. I knew Micron Technologies was about to report their earnings. And so I looked at some other, the Micron tech, the problem was, for Micron, everybody knows that Micron Technologies sees big swings after they report their earnings. Therefore, the options brokers made those, they didn't want to take the chance. So they made those options very expensive. I said, why do I want to buy expensive Micron options when I can get much cheaper ones at Taiwan Semiconductor? So we went to Taiwan Semiconductor. And again, when you get 4% move in one day, that can lead to really outsized moves, like I said, over 300%, and sometimes you get even bigger moves, like we saw with the gains of over 1,000, say of over 1,000%, almost 800%, et cetera, 400% in Apple.
Right.
Anyway, go ahead, Rodrigo. I'm sorry.
Yeah, really quick here, man. I'm getting flooded with questions about the live room, Matt. I'll just use a couple of minutes here, go through these, and then we'll go over a couple of topics that I want to cover. So again, thanks a lot for sending these questions. Does Matt mainly go over member trade ideas? Yes, it's very common. We have a lot of winning trades from the members. As you can imagine, if you're trading with Matt, eventually, you're going to be able to replicate and also do similar trades like Matt. But keep in mind, we're trading as a unit. We're not individually doing random things. We're following the guidance of Matt, right? Are the sessions okay? So really quick, there's a couple questions about the sessions. There's a live call that's Monday, Wednesday, and Friday with Matt, and that's at noon. That's at 12. Separately, there's a Tuesday call, which is from 11:30 till about 12:30, and that so basically you have 4 live calls with Matt Maley per week. Okay, in these calls, you're going to get anywhere from like 10 to 15 trade alerts in those calls. All of those calls are recorded and they are posted in the member portal. So if you're a member of the chat room, you have access to the Tuesday meeting, but the Monday, Wednesday, Friday, we only added it today because this is the last seminar that we're going to do for the year. So we want to go out with a bang. We want to give you guys all this stuff. So this is just for this session, all right? Because there's some members that don't have access to all the meetings. That's because they're separate things. We just combined everything today for you, again, since it's the last seminar of the year. Good question there. Let's see. What is the chat room schedule? So the chat room schedule, well, it's basically open 24/7. It never closes. We have an international community. I've signed up people all the way from Nigeria to Finland to Canada. So it's open 24/7. Matt Maley is there from about 8:30, 9 a.m. Eastern till about 5 p.m. So it's basically all of the regular trading hours plus more, right? So he's there 9 a.m. till 5 p.m. around there, right? Sometimes a little bit later. Let's see, next question. Does Matt Maley trade around market events such as Fed meetings and such? Yes, we actually have a lot of, that's really one of the biggest events for us. We trade volatility. With Matt, you can basically call it volatility trading, if you will, because when the volatility is there, that's when we're taking advantage of it, especially with the way that Matt trades with triple leverage ETFs and zero DTE calls, right, or puts. Next question, is the price the same next year? Yeah, the price will not change if you sign up today before it expires at midnight. You will, next year it renews at the same. It's not going to change. Next question, does Matt provide education? Yes, during these calls, Matt is not only going over setups and trades and market events, but he is explaining why it's happening and how he's going to take advantage of that volatility. We don't just give out trades. We have a different approach here with Matt's live room. So education is big. It's important. Every trade that we do comes with a full back end of what we're doing. Really good question there. Is the chat room mobile user friendly? Yes, you can log in from your phone. It's anywhere, as long as you have internet, you can use this. We also have push notifications. Good question. We just launched push notifications. So all you have to do is download the Benzinga app with your credentials, and then you're going to get all of the notifications when Matt is going into a trade or going out of a trade or adding to another trade. This is free. You just have to download the app, and if you're a member of the room, you get those notifications. How much are these trades that Matt is doing in the chat room? Good question, Billy. So Matt is buying calls and puts, and typically these calls or puts are around 70, 80, 90 cents. These are not, there's not a lot of premium in these options that we're buying because they're really short dated, short term oriented, volatility trading, right? We have to do it a certain way. And good question there. So next question, Phil, the link to join, we're going to post it in the chat. But basically, you guys will get access to all the stuff with Matt, which is basically, let me recap all of it because we just made this special for you guys today. So it's 15 plus trade alerts with entries and exits, and these are done via Zoom call. This is Monday, Wednesday, Friday, okay? Separately, you're going to get 3 to 5 trade alerts a day in the live trading room with entries and exits, okay? Everything entries and exits. Separately, you're going to have a live Zoom call for the chat members Tuesdays, where Matt is also not giving a market update, but also giving out trades and updates on the trades from the chat room. Separately, you get 6 swing trade ideas per month by email with entries and exits. And then you get ongoing coaching, mentorship, and market education with Matt. He does it all the time. And that kind of covers everything that you will get if you do sign up for Matt's live trading room. Matt, did I miss anything there? Is there anything that you want to add here before we kind of start running over a couple topics here?
No, that covers pretty much everything. I just, if people can still see my screen, I just say one other example is that just I want to add is that here was an idea that people asked me about in the chat room. I said, yeah, I think it looks really good, but I'm not going to participate. I had some other positions on, and like a dope, I didn't participate. These people made 500% the next day. It was some Amazon call options, and it was right before the stock split, and the stock tends to do really well in front of the split. They sold half of it at 550 and up 1,500%. These, so my point is that it's not just it's me. People are talking to each other all the time, coming up with ideas. I'll voice my opinion on those ideas, and sometimes I say, "Hey, listen, I just don't like that idea. It doesn't mean it's not a good one, but I think I've saved some money. A lot of people, saved a lot of money for people avoiding some of these things when you're getting really. It looks like everybody's getting jumping on a bandwagon, and it's getting late in the move, and kind of warn people, don't. It's a little late to be getting on that. We kind of avoid it. But the point is, it's a team effort, and I've given a lot of what I think a lot of great ideas and some a lot of winning trades. But we're constantly bouncing ideas off each other all day long, and it really works out well. So that's the only thing I would really add there. Oops. Can't hear you, Rodrigo.
My bad. So yeah, Mustafi had a good question. So are there any stocks being traded in the in the room? So the 6 swing trades that you're going to get, Mustafi, by email, those are stocks, those are swing trades. But there's a ton of people that ask Matt about long-term holds. There's no sort of restriction of you asking anything in the live room. We trade options, but there's a lot of people that have questions like, hey Matt, what are the top 3 stocks that maybe I could buy and hold for my kids' college fund, or to buy and hold for 5-10 years? So you can pick Matt's brain all day. Okay, we talk about a lot more than options. So Matt, let me, by the way, the link to join is in the chat. This is going to be available till midnight, but if you sign up while we're live, you're going to get an extra bonus. You just got to email me when you sign up before we wrap up the session. We're going to be here for about an hour around there. Okay, Matt, let's carry on here. So we've been talking about the whole China situation. We've been following the Taiwan. It seems that China has sent about 70 something warplanes. It's getting heated up. Do you think that's what the market needs in order to move another leg lower, or do you think it's just
well, that could certainly be one of them, and there are several different things that could take it lower. But I mean, it's funny because today, with all this stuff about China reopening or reopening further and because they're taking the COVID restrictions off. But I'm like, obviously the market didn't react too well to that. I mean, the futures were trading higher in overnight trading, but as the market opened, we traded down. And the big concern there is that it's great that to a certain degree, I suppose it's great, but that they're going to be opening up. But the pain they may have to feel between now and then might be a lot bigger than people were thinking. But the big issue with China is, of course, what's going on in Taiwan. And they came out again, like you said, two things. Number one, they said they flew, was it 70 or 77, whatever, planes into Taiwan's airspace, something they haven't done since Nancy Pelosi was visiting them a couple of months ago. And just again, another show of force. They made declarations about how they don't like what's going on with the U.S. and Taiwan. Taiwan, at the same time, they have a mandatory military service obligation for their citizens, for their young citizens. They extended that. They've now made it longer because of this issue. They're very, very concerned. And some of these experts think it's something that could happen this year. I don't know that will happen this year, but it could, and it's certainly something they're preparing for. And you start to get a big issue. We start to get a hot war in Taiwan. You got some major problems going on there because. Also, you talk about excuse me, the people saying about the delay in getting their products, supply chain issues. I mean, multiply that by a gazillion in the semiconductor stock. I mean, U.S. is now building, and in Europe, these chip companies are building new confabs, but I tell you, they don't take 6 months to build. Okay, they take 2 years to build. So we're not, the way things would shut down, and the chip industry would be unbelievable. There wouldn't be any chips coming out of Taiwan. The 25% of U.S. chips come from Taiwan, and more importantly, a much bigger percentage of the most complicated and integral chips are the ones that are made in Taiwan. So this would be a big problem. Now, the other thing, of course, is what's going on in Taiwan. If it reopens, that's fine, but it's not like that's the only problem they've had to face lately. I mean, they had obviously this huge building, their real estate area. They are in big trouble, and that's not going to turn around anytime soon. Yes, they are doing things to buoy and to keep a floor underneath those developers, but they ain't coming. They're not bouncing back anytime soon. And so, for people to think that the reopening of China will suddenly create a booming global economy is just wrong. They have home sales are down. Auto sales are down. I mean, you saw what happened. The reason why Tesla has been getting crushed lately, they came out again and they stopped production earlier than expected in Shanghai. Then why? Because the demand is way down. The retail sales are down. They have traffic in their Beijing restaurants are down 70% in November, and it's gotten even worse in December. And that's even after some of the restrictions have been taken off. Okay, because people they don't want to go out there. There are self restrictions. So China is a big issue out there. Their economy grew way too fast for a while now. It's slowing down. They're going to be, again, if they may not go into negative growth, but we would say, everybody be happy with 3 or 4% growth. That's not what the globe has used to out of China. That's going to create problems for the U.S. because we need their business to grow our economy.
Right. There's a lot of uncertainty, especially with the reopening of China, oil, in the mix there as well. And I mean, considering everything that's been happening, Matt, you've been following all that stuff there. So moving on here to more local things, the Fed, right? They've already had their meeting. They've obviously been, dancing around what's going to happen. Should people trust the Fed, Matt, and why or why not?
Well, I mean, one of the things that people are missing here is that they're blaming the Fed, and so we can't trust the Fed. It's like, well, they've done everything they said they were going to do. There's no surprises out there. So yes, you can trust them when they say something. Last year in 2021, they kept saying we're going to keep interest rates low. We think inflation is transitory. I was saying they're ridiculous. I said they can't believe how wrong they are. And I wasn't certainly the only one saying that. Other people were. But the fact of the matter is they did what they said they were going to do. They kept the liquidity spigots open for another 6 months, so 6 months longer than they should have. But they did what they said they were going to do. And then they slowly changed it in late last year. That's when I turned bearish. And they said, nope, we're going to tighten up. We're going to end QE. We're going to start QT, and we're going to raise interest rates. We can trust them when they said, David Tepper, I don't know how many people of you are familiar with David Tepper, but he is an incredibly successful hedge fund manager. No more for his bond calls, for his bond investing, I should say, but he's made some unbelievable calls on the stock market over the years. And, going back, a couple of decades. And he came out last week and he said, I'm short. I'm leaning to being short. And he talked about, to be honest with you, he's been talking about the things that I've been talking about for a long time. The stock market is still expensive. The Fed is not just trying to tame inflation, in my opinion. They're also trying to get the markets back in line with the underlying fundamentals. We've been living on steroids. The markets have been living on steroids for 12 years, ever since the financial crisis, actually 13 years now. And when you take that, and then of course they doubled down or tripled down on that stimulus, those steroids, in 2020 when the pandemic was at its low. Now that they're taking that away, the de-risking of the marketplace and the deleveraging of the marketplace is going to take longer to play out than most people realize. The stock markets don't go from way overvalued and stop at kind of overvalued. They don't even stop at fairly valued. They always overswing to undervalued. There's a reason for this. It's not just, oh, that's just the way it's always been, so it'll happen. No, there's a reason. They add way too much leverage. And when that leverage swings the other way, people have to sell. Even when the market falls to fairly valued, they are forced to sell because they have margin calls, because they have added way too much leverage. That does not happen overnight. That pendulum swing, that's why the worst of take it back. When a bull market becomes extremely overvalued, it's one thing when a market gets overvalued and we run into a bear market or deep correction. Okay, fine. But when it gets extremely overvalued, it always swings and takes more than just a year to play through. That's why when people say, don't worry about it, the market usually doesn't go down 2 years in a row. That's right, because the market usually doesn't get extremely overvalued. This time it did. 22 times earnings, 3 times sales. It was only exceeded once by in history, and that was back in 1999. And I remember, I'll never forget this time. I had a debate on CNBC. People were, there was one person saying, "Oh, you're saying the market's overvalued, but it's nowhere near as overvalued as it was in 1999, 2000." I'm like, so what? You're trying to tell me that the market has to get the most overvalued ever for it to roll back over? That's ridiculous. It's incredibly overbought. I'm sorry, it's not, well, it's overbought too, but it's incredibly expensive. And if the Fed changes their policy, which they say they're going to do, that thing is going to start swinging before it gets as overvalued as it was back then. But no, those people are paid to be bullish, and they didn't listen. I was pounding the table saying, raise cash, significant amounts of cash, buy some puts, get defensive, etc. That worked out really well. Their stance didn't work well at all. We are facing a situation now where the stock market is still overvalued at 18 times earnings, almost 18 times earnings. Every single bear market in history, so at least since World War II, and maybe since before World War II, I just didn't look earlier than that, but since World War II, so 50 to 70 years, I looked at every single one, and the market has always gone to undervalued. In other words, 15 times earnings or less, every single one, okay? And every one, not all bear markets have had recessions. Most of them had, but the bear markets that included recessions, which this one looks like it will, again, you're probably going to go lower than 15 times earnings. And so to get to that, you've got to get, you're looking at something well below 3,500 on the S&P 500 before this thing bottoms. So we're going to have a lot more volatility next in 2023. And you get people like that. We have David Tepper talking those kind of numbers, 3,200, and we have others. I'm sorry. Jeff Bezos and making their comments, and even Elon Musk. I mean, I'll just read what he wrote on his, I wrote him down, what he wrote on his text. He says, have cash, keep your powder dry. This was over the weekend. You get some pretty extreme moves when things happen in down market. He looks for stormy times for the next year and a half, not in a year and a half starting this time last year. He's talking starting now. I mean, into the middle of use the word 2024, middle of 2024, before things calm down. Don't have margin debt, etc. I mean, these are guys. These are billionaires. They didn't become billionaires by being stupid. They're the ones coming out with these warnings, and it's not just me. And I'm not just. And again, I'm not a perma bear. I mean, in March or May of 2009, okay, we had guys out some big. George Soros came out and said this is a sucker's rally. The market had bounced from March 2009 to May, and he said it's a sucker's rally. I said no way. This rally's got plenty of momentum. It's going to last quite a bit longer. To be honest with you, I didn't think it would keep going as long as it did, but I knew it was the early parts of a new bull market, and that's exactly what happened. I'm not a perma bear, but I'm telling you right now, just because the stock market has gone down a lot is not a reason to think the market is cheap, okay? 18 times earnings, 18 to 20 times earnings are something we've gotten used to, but that's all in the last 10 years, last 10 to 14 years. That's because there's been zero interest rates and huge QE programs. We no longer have zero interest rates. We have 4% interest rates going higher, and we have and we have, instead of having QE, we have QT. They're shrinking their balance sheet. They're selling assets. So this is not the type of thing that's conducive to an expensive stock market. Instead, we're going to go back to what traditionally has been a fairly valued market, something like 15 to 16 times earnings. And just to get to 16 times earnings, the S&P's got to fall to 3,500. Okay, so again, I'm not trying to play major league scare tactics here. There's a lot of, like I said, a lot of really smart people are saying the same thing. A lot of people a lot smarter than I am. So if you don't believe me, listen to them. And when you have that many smart people saying batten down, I mean, remember, that's one of my greatest examples is Jamie Dimon. I mean, he's saying batten down the hatches. In 2016, the stock market was down about 15%, looking a little ugly, and people were really still worried about the banking system. And he came in and he said, don't worry, I'm so confident, I'm going to put, he had just put it in, $26 million of his own money into JP Morgan stock. Not a $26 million buyback by the company, $26 million of his own money. What happened this spring? Same thing. Market's down 15%. People are getting worried about the markets. What does he do? Does he buy back $26 million? No. He says, batten down the hatches, the hurricane's coming. And he doubled down on that a couple of months ago. Okay, or less than about a month ago. Okay, again, this guy sees, he's maybe the most powerful businessman in the world, certainly one of the most powerful. He's as the biggest bank in the world. He sees businesses all over the world. He sees all the details. When he says something like that, people should listen. You listen when he made a bullish comment, when he made a bullish bet in 2016, the market went up for a year and a half, almost in a straight line. That day, that was the bottom for JP Morgan stock that day. That was bottom of the stock market that day. 18 months, it just went higher. This time, he didn't say, let's go in and buy everything. I'm going to buy my own stock. He said, batten down the hatches. We got to listen to these people. And so let's take advantage of it. Let's not be those poor suckers that were around last year who were getting killed and watching the Tesla stock go down 73%. Let's be the people that are making negative bets on that, maybe in the options markets or ETFs, raising some cash, and then taking advantage of the bounces and making money. We want to be when this thing bottoms, when this bear market bottoms, like I said, it always goes to the other side. We're going to get that opportunity. It's not once in a lifetime. It happens a couple of times in most lifetimes. It happened for some people. It happened in for people who were in their 70s. It happened in 1975 and 1981 and in 2003 and 2009. It happened 4 times, but it happens every 20 years or so. We're now heading into one of those, we're coming up on one of those other things. At some point in the next year or so, maybe it takes 2 years, I doubt it takes that long, but next year or so, we get that one of those things where the market gets washed out, the baby gets thrown out with the bathwater, the forced selling knocks it down to really cheap levels. But the people who have money, who've raised cash, who've made some profits during the downturn, they're going to be the ones not only have the money to buy at those, those opportunities only happen 2 or 3 or 4 times in a lifetime. But they're going to have the confidence to do it too. And they're going to see, yes, this market is washed out. I've got some money. I'm going to put it to work. And when the market starts rallying, they're going to be adding to positions on the way up. Whereas what most people do is like they did from 2009 to 2012 for 3 years, most investors would take, every time the market rallied, they take money out, and it just kept rallying. And then finally they turned around and started buying again. But they had already missed a big part of the move. So this is what we're trying to accomplish here in the chat room. Again, working together. People who work alone is just really tough to do, even for the biggest pros. We work together and know what we're up against. We know what history tells us. Just because the stock market is down a lot doesn't mean it's cheap. And just because a stock, the tech stocks, like this one analyst, he's a well-known analyst, and he was saying, that's my wife. He was saying that that the stocks over, just because stocks are down a lot does not mean they're oversold. Okay, especially when they were so overbought, so overvalued. It takes longer. It just makes sense. I mean, some really smart people don't want to believe that. They want to believe that we can go back to what we had for the last 10 years, the last 14 years. But for the last 14 years, we had QE and zero interest rates, or really low interest rates. We're not going to have those anymore. Okay. You've got to make that assumption. If something changes, if we see a big change from the Fed, then we can change our thing and get much more aggressive. We'll turn bullish right away. And there are things that can change that. But right now, we have to go with that assumption. The Fed is going to keep interest rates. And even if they do cut them, they're not going back down to zero. Those are artificial. Zero interest rates are not healthy. They only should take place during times of emergency. That's what we had. They kept them on for too long. That's something the Fed learned. The next time they take them down, they're not going to push them that as far, and they're not going to push them that low, because the markets get out of whack. Everybody thinks they get free money. Everybody thinks that they don't have to work. They think that that everything, that businesses that should go out of business don't go out of business, etc. The Fed is doing more than just trying to tame inflation. They're trying to get interest rates back to a level that they will trade on their own. They're trying to get the stock market back to a level that will trade on its own. The stock market hasn't done that since in 15 years. Okay, they're trying to get it back to doing that. It takes time to get to that level, and it's going to be choppy, a lot of volatility, and a lot more pain before before we get there. And when we do, those of us who have been trading actively using these tools to our advantage are going to be sitting on plenty of cash to take advantage of it. Like as Elon Musk said, have cash, keep your powder dry. That's a direct quote from him, from a text from this weekend. We want to be those people. Have cash, and we're trying to do more than that. We're trying to make some trading bets that actually help us profit during this downturn. And I think we'll be more of a downturn there. I got, as you can see, I'm very passionate about the markets. I get a little riled up and I start rambling. I'm sorry to keep on going like that, but that's what we're facing right now. And we have more to go through. It won't happen in a straight line. And that's why, believe me, there'll be times. Let's say if God came down and said, you know something, the market's going down another 50%, I would say, that's great, but we'll still make some money every once in a while, every few weeks in bullish trades, because we'll see bounces along the way. We'll take advantage of this, and that's what we did this year. I turned negative on as I mentioned, on the XLE. I'll pull it up for you here. We did the XLE. Remember, I was really bullish on the XLE, on the energy stocks, but in whoops, hold on a second here. Let's see if I can escape. Let's see. Oh, no wonder. Okay. Here we go. My distraction, there it is. Okay, here we go. And it was 85. Let's go to 85. Here we go. Bang. Okay, I'll blow it up so you can see it a little bit better. Here's the XLE. Boom. Okay, we came in. I turned, I turned negative on the XLE. We bought the XLE June 17th, $90 puts. And look at that. We held them for several days. This was a multi-day trade. We sold the first half up 560%. We sold the other half up 460%. So over 500% on the combined trade. Okay. It was funny because I got a little nervous when it really started falling out of bed, but we were able to catch it up back up here, and then it rolled back over. Okay. So there was one where I'd been bullish for a long time. I switched to a bearish position, and it worked out real nicely for us. Hold on a second. All right, there we go. Whoops. There. Okay. Shoot. Okay. Excellent. Okay. So then later in the month, okay, so let's just go back. I want to see it. See the $90 puts, June 17th, $90 puts. We held them for 1, 2, 3, 4 days, over 500%. But after we sold both, we sold half in the morning, the other half in the afternoon, and we made over 500%. 2 weeks later, we're buying the June 30th $74 calls. We're on the very opposite side because I remain bullish on the group. Whoops, I'm sorry. I remain bullish on the group on a longer term basis and even on an intermediate term basis, and that's where I stand right now. So we came in here and said, the group's got oversold. We came in, we bought the call options. 2 weeks earlier, we had bought the puts, and we made almost 200%, 186% the following in a 1 day trade. So again, we're going to be taking advantage of it in both directions, and that's what you can do. We have the tools for that now, it's just something that that can be taken advantage of. And options are risky. We're not all of them are going to work, and that's why we're not looking to bat 350 though. You bat 350. 350 in Major League Baseball, you are going to become a very rich person if you bat 350. Trade stocks, we're looking to back 600, 700, 800. 800's, but I mean, more importantly, we batting 600 or 700, and then we're letting the winners ride and getting out of the losers with smaller losses. And again, sometimes we leg into the trades. When we buy some, it's like, okay, that's not working, let's get out. And okay, small loss. And then all of a sudden moves up, let's add to it because it's really working and it's about to break. Boom, we add to it and suddenly we make, so my point is you make 300% on a nice size trade and lose 20% on a small trade. First of all, the small trade, you lose 20% on one, you make 300 on the other. That's a big, that's a nice spread, a kind of nice bullish spread. But it's even bigger when that's a bigger trade and you've added to it while it's making money. And again, that's kind of some of the things that we learn on the way is adding to trades. Again, the risk management, adding to winning trades at times where people are like, "Oh, geez, I wish I had bought more." It's like, go ahead. If you think it's going a lot higher, go ahead and buy more. Don't kick yourself for not buying more at the bottom. Go ahead and buy. I know it's up. Buy some more anyway. Your average price is still going to be good. Keep going. And so it's okay. So again, you asked me two questions, and I rambled on for half an hour. I didn't mean to, but
no, it's okay.
These are the issues that what you asked about the Fed, and I went into a lot of different things. But the point is that what the Fed has done, in many ways, we have these college professors, and they bitch and moan about it. I'm like, yeah, we can bitch and moan about it, and I understand why, as a college professor, you want to do that because hopefully you're a real well-known person. You can affect what they'll do. But you know something? For the rest of us, let's just, instead of bitching and moaning and worrying about what they should be doing, let's worry about what they are doing and profit from it. Because if we trade on what they should be doing, what you think they should be doing, or what some professor thinks they should be doing, I mean, if you did what that professor, based on what that professor said, you lost a lot of money this year because you kept buying at the wrong time. Anyway, so
that's an interesting analysis there. So let's move on here to something that's been making a couple of headlines, and maybe you can talk to us a little bit about the overall health of the crypto sector, especially what's happened with this scam Bankman, being taken in, and now like the whole situation with crypto. Do you see any other of these? I don't even know what to call them anymore. Any of these types of businesses blowing up? You've seen a lot. You've seen all these different ones. I even forget the names. It's like one by one. Do you think this is going to continue happening? And what's your overall view on the whole situation there with the crypto and all this stuff?
Well, I don't know how some more of these can't collapse. There's just too much. I mean, I don't know if any of you saw that thing with the Binance, that interview with the Binance CEO just over a week ago. And it was with Becky Quick on CNBC. She did a great interview. She asked tough questions, but very fair questions. And the answers she got back were not what you wanted to hear. And she pushed him as hard as she could, and he wouldn't really answer the question. And the fact that he wouldn't, I think she was smart enough to know, hey, everybody, can you notice he's not answering the question? And then the question had to deal with what he got a bunch of money back from. He got over $1 billion. I think it was $1.8 billion or $1.9 billion from FTX. This is Binance, and it's like, yeah, but you can't keep that because there's really just stolen money. So you're going to have to. They're going to be able to claw that back. and whether they can or not is one thing, but there's definitely an attempt will be made to call it back. And she asked of the Binance CEO, will you still, will you be able to pay that money and not have it impact your ability to keep going? And he answered, he just kept saying, we're fine. All right. He wouldn't answer the question. He said, our financials are good. We're good. She said, yeah, but will you? And he just wouldn't answer the question. And Binance is one of the best out there. If they're in trouble, others are a lot of trouble. Having said that, look at what this stock has done. This is what I have up on the chart here is Bitcoin. And let me just get rid of the moving averages. I mean, this thing hasn't gone. I can't believe it hasn't traded down to 10,000. So what I'm saying is that, and the same thing with Ethereum, they're holding up there. Do you want to go in and buy some of these companies? No, I don't. I still think that the Bitcoin thing is Bitcoin and Ethereum will probably have to, Bitcoin will probably have to fall towards 10,000. But I would have when I said that 3 weeks ago, and if anything, it's gone up slightly. So it's I'm a little confused, and that makes it tough. The one thing that really makes it tough is that for it to go a lot higher, all of this stuff it's going to be a long time, and maybe we can measure it in months, not years, but it's not going to be 3 months. It's going to be 6 months or longer before the institutional players are going to go back into this. There's just too much downside risk in terms of whether looking bad. I would say Fidelity and one of these people go in, and they're wrong. I'm going to say Fidelity. They're involved. They're staying involved, and they're growing it. But they're suddenly they're not going to suddenly load up their stock funds with these cryptocurrencies. There's just too much downside. They can look bad if there's another big blow up. Even if they didn't lose a lot of money, they'll look really bad. They don't want to do that. There's going to take there's going to have to be a lot more legislation before they're going to feel comfortable, before they'll be allowed by their bosses to buy a lot of these cryptocurrencies. So I don't think they're going to run away from us, and therefore I'm going to stay away from them. And I'm definitely going to stay. I mean, I understand the people why they like Coinbase. Hold on a second. Let's see, oops. But it's just like, do you want to buy it for a flip? Every once in a while when it gets really oversold, I can understand that, but I'm not ready. And if you come in here and give me 100 good reasons to buy it, I'll say, you're right, but I'm still not going to jump on. There's just too much risk involved. We all want to buy the next thing that's going to go, take a $5,000 investment and turn it into $100 million. But it's just it's usually something out there nobody really aware of right now, and that's not to say that the Coinbase is going to go out of business. There's a lot of good reasons to like it, but I'm just not backing up the truck right now, so I'm avoiding it.
Right.
It's not a good hedge against inflation, as we've learned. It's not a good flight to safety, as we've learned. So I'm avoiding it for now.
Yeah, I mean, people just say these things like they're facts, and then so the other thing, Matt, is that I don't know if you know this better, but I don't think institutions were getting in Bitcoin when it was 10,000. If anything, it was when it was 50, right?
Well, I mean, they're all getting it very early, but even then, what happened was they didn't feel comfortable in getting it in a little bit bigger size until it got above 20,000, and then they felt real good for a while. Now, of course, they don't. And none of these, especially these big hedge funds, none of them bought a kind of percentage that would wipe them out. I mean, if you ran a multi-asset a mutual fund that had $1 billion or $10 billion or $20 billion or even bigger, your Bitcoin position was so small that even though it's been they're much more worried about that Microsoft has gone way down or Apple has gone way down. And just to review that claim I made earlier about Microsoft and how I said everybody should sell it, but last Thanksgiving, the CEO of Microsoft sold. He did a little bit right the week of Thanksgiving, and then a little bit just after, where he sold a full 2/3 of his position, $370 million, $374 million to be exact. I mean, CEOs don't sell $374 million of their own stock unless they think it's going down and going to stay down. That's just been my experience. And I told people in the chat room, if you own the stock, get out of the stock. And a couple of people, at least one person in particular, and another person said the same thing, said they sold 100% of the stock. Well, that CEO, he didn't sell all of his stock. He did hold on to some, and he sold a full third. So it was a lot of money still. But he saved himself $125 million by selling that stock when he did. And this was just experience on my part. Microsoft is a great company. Mr. Nadella is a great CEO. He did nothing unethically wrong. He didn't, it wasn't like he sold it just before a big scandal erupted. He just saw that his stock was expensive. He saw what the Fed was going to do. So he took a big chunk of his net worth off the table. It was a smart move on his part. He did nothing remotely illegal or remotely unethical. Believe me, there's been a lot of questionable things going on. Insider trading by government people, et cetera, whatever. We can talk about that for ages. This was not one of those unethical things. He was not the one who pushed the stock up. The stock went up on its own. And if he had made some irrational claims, which he did not do, he just saw what was going on and he decided to sell. And these are the types of things that we talk about in the chat room that most people don't think about because they haven't been doing this for 40 years like I have. But this is the types of things that we like to do. Like I said, Microsoft's a great company. There's going to be an unbelievable opportunity to buy this stock back. And he's going to, and believe me, he still has a lot left, and he's going to get paid more at the end of every year. As part of his pay is going to be in Microsoft stock. So we're not worried about Microsoft going out of business. Don't get me wrong. But it was a great sale a year ago. He made a great sale. And when smart people, insiders sell like that, I pay attention. Just like I did when smart people buy, when I mentioned earlier, what Jamie Dimon did when he bought $26 million of his own stock. That was a lot of money. You don't do that unless you're really confident. That was what an insider bought in that case. So it goes both ways. And it works really well for us when we take advantage of it. Now, we weren't doing any of this back in 2016, so I can't claim that I help people then. I was just covering institutional people then, but it's something I talked about back then to my institutional clientele.
Right. And just to clarify for those that are not, Matt is a chief market strategist, so he provides analysis and research to institutions, right? You as a retail trader, I mean, you get that and a lot more. You get that, the trade alerts, the Monday, Tuesday, Wednesday, Friday call, all the entries, exits, actionable things, right? Not just the overall macro analysis, which is what Matt trades for the most part, almost like trading the macro, but we trade it in a way that we're using short-term options for this. So Matt, we've gone over a couple topics here. I wanted to ask you about the overall real estate sector and the financial sector, considering, if the economy does slow down or if it doesn't, I mean, what do you think about those specific sectors, how they're going to perform? Is it something that should, the banks are in good shape, right? I believe last time we and I spoke. How about the real estate sector?
Well, the banks are in good shape, but that doesn't mean it's one thing to say, well, the banks are in much better shape than they were in 2007 or 2008 as we going into the crisis. That's fine, and I think they'll be fine this time. I'm not worried about them, but it doesn't mean that their businesses won't suffer. Interest rates are moving up. Fewer people are taking out loans. There's not all that liquidity being sloshed around by the QE program. So that's going to take away their profits. They're not going to do as well. I'm not worried about banks going under as much as I'm worried about them making smaller profits. And of course, we have an inverted yield curve, which everybody's heard about, and that when they loan out at the long-term interest rate and they take money in. I'm sorry, take it back. They pay out money at the short-term interest rate, to their depositors, and they take in money from the people they loan to at long-term rates. And so usually with a steep yield curve, they make money here and they give money here. Well, obviously they make the spread in between. That's very positive. When the yield curve inverts, they lose money. So they're actually losing money. Well, their net interest margins that we hear about all the time are not doing well. They get that in a slower economy. Doesn't matter how cheap they are. They are inexpensive. But they're going to have, I think, further headwinds next year. I don't think, and I'm not calling for a repeat of 2008 at all. But just because I'm not calling for that doesn't mean you ought to be buying the stocks. When you talk about the other issue is Real estate. The one thing I do have to say is that, again, these stocks are very inexpensive. They were priced in at the worst, at the lowest level this year. They were pricing in what happened 15 years ago, a complete implosion. I don't see that happening because people, we just don't have the same kind of leverage in that business where people were buying. Not as many people were buying to flip. Not as many people were buying with no money down. A lot of people paid cash for their houses, and that's a little misleading. But they had enough cash on the sidelines to be able to pay for it. But my point is that I do worry about that the housing industry slowing down. I do worry about these stocks will come down further. The home builders, which you can look at the ETF is the ITB, ITB Home Construction ETF. And see, when it was back here in June, it was like trading like it was back here, again, like it was 2006, 2007 all over again. That's not what I thought the case. 200. Let's just go 5 here. Okay. Now, okay. So do I think they will come back down? Yes, I do think they'll come back down. I just don't see them going back down to what we saw, way back in here. So I guess my point is, as the interest rates remain high, and at some point people are going to start, losing their jobs. I mean, the amount of layoffs have been announced this year. Most of those layoffs haven't taken place yet. When people actually lose their jobs, we're going to start seeing some of those houses come up for sale. There's going to be more supply, and the thing will get hurt, and it will hurt the economy. But I'm not looking for the big disaster. And this is a roundabout way of saying that at some point, probably next year, maybe the year after, but these stocks are going to be, again, trading like, because people are going to puke them. They're going to take that natural human nature, thinking, oh my God, I got to get out of all these stocks. And it's going to provide an unbelievable entry point because those companies are not going to be in as bad a shape as they were 10 to 15 years ago.
Yeah, I mean, we all saw this coming, Matt. Hiring freezes are first, then, they start laying off people and stuff like that. But I mean, is it fair to say that this is just the beginning?
I don't think it's just the beginning, but I think it's a long way from the end. I guess the point. Well, let me rephrase that. Is it just the beginning on the employment?
Is it just the beginning where we start seeing this sort of, corporate layoffs and?
Yes, it is. Absolutely. I thought you were talking about just the bear market overall. I mean, we're already down 20% or so. So it's not but the corporate layoffs, and just look how it happens. Again, like you said, first come the hiring freezes, then they start getting small layoffs. But you see what's happened in the financial industry. Yes, Goldman Sachs has laid off a few people. You're going to see a lot more layoffs next year. What happens in the financial industry? I've seen it in so many different cycles. They come out, and the big thing we've really heard, not so much in layoffs, is that the bonuses are going to be much smaller this year. And that's what they do. They come in, they give people much lower bonuses, and that's it. The bonus pool is much smaller. And they go, okay, our top people, we can't cut them much. The bonus pool is down 25%. We're not cutting them 25% because we need them. We need, we'll go to them and say, hey, you're going to be down 5%, or hey, maybe you're going to be flat. But hey, down 5% is pretty good because there's going to be a lot of people. Well, if your best people, and it's not a small number of them, their best people are only down 5% or 10% or flat. That means the people who are getting who are going to get cut, they're actually going to be down 30% or 40%. And what they're really hoping is those people will leave on their own. They'll get ticked off because of a lousy bonus and leave. But when they don't leave, because there's no place else to go, they get laid off. So, and they get late. So what they do is they get the lousy bonus in December and January. They wait until March. If the market doesn't get better, things don't turn around, which they usually don't, then they actually lay people off because they got to pay the person a bonus anyway. They've worked the whole year. They're going to, I guess, I don't know if legally they have to, but they do. They say, hey, we got to pay him something. We got to give him some sort of bonus. He worked the whole year. Okay, so we'll give them the lousy bonus, hope that they leave so we don't have to pay them severance when they leave and pay them benefits when they leave. And then when they don't leave, those who don't leave, we'll axe them. And you're going to see a lot more layoffs in the financial services industry in the second half of the first quarter, in the first several months of this year. And when that happens, it's going to be a lot more. I mean, these tech area, some of these guys are really, really smart, especially the best of some of these smaller companies that just went out of business. Now they're going to land jobs, but there's going to be a point where they're not going to be able to find jobs either. But there's a relatively small area where the financial services industry is huge. And when they start losing, it's like we've always said, people keep buying And people is like they've kept the consumers kept up with their spending because they've been borrowing, they've been using the credit card. Well, you're not going to keep adding to your credit card if you lose your job. Okay, so that's where the whole thing starts. People have to sell houses. People have to they'll stop spending on their credit card because now they're suddenly only have a severance payment left or an unemployment check left. They're not making what they used to make, and they don't know if they'll make money. They don't know when they'll get a new job. That spending dries up. That consumer is going to dry up in a big way, real fast. So yes, I do think this is the very early innings of the employment, the downturn in the employment cycle. And no better than the mid innings of the bear market in stocks for that reason.
So help me make sense of this, Matt, right? So they say that the economy is doing better, but then we have inflation, which is higher than the increase in wages that we've had. So technically, real wages are lower. Earnings are coming down. I believe the last GDP prints have been lower than expected, right? Or
yeah, they weren't as bad as they were in the first and second quarter of the year, but that's only because we that pent up demand came back. It's still not good. It's not good growth. And it's being the growth is lower than expected, like you say, better than it was in the first two quarters because we had negative growth in the first two quarters. But it's still low. But the big thing is that it was only being generated by the consumer taking on more debt. And now we have credit card debt at a new all-time high. Okay, the savings rate that shot up during the pandemic, it's back down to the same level it was in 2008. The people's balance sheets are not good. I happen to be talking to one very influential investor today, and he was just talking about him. And I totally agree with him. The medium income, I mean, people are 64% of the people in America live paycheck to paycheck. What are they going to do when they lose their job? I mean, they're going to keep buying? No. Okay, it's there's not a lot of savings there. There's not a lot of wherewithal to be able to do that. So I get a little too enthusiastic, thinking I'm calling for the end of the world. I'm not. But when we have the type of situation, so many people are still saying we're going to have a soft landing, and I go, how could you be so sure of that when we've only had one soft landing in our lifetime? I mean, and I'm an old man. It's like, these people have been doing it 50, 60 years, 70 years. We've had one soft landing. Are we really going to get another one at a time where the Fed is going from the most accommodative stance they've ever had to a tightening position, going from massive QE to QT? Doesn't make any sense. We're going to have a hard landing, and it doesn't mean that we're going to have a repeat of the great financial crisis. It doesn't. I'm not saying that. I'm saying is we're going to need more. Let's take advantage of it. Let's not be the patsies who sit there and just let the rich institutional guys make money.
So, I mean, I guess they're just getting this from the employment numbers, but I mean, yeah, you can be employed, you can work 2 jobs and barely be making it. And I guess that counts as, we're doing good. But I mean, we have to be looking at, what do you think about the unemployment numbers right now? Is that something we need to be looking into?
Well, because yes, I mean, it's there's a lot of questions about this. They call the birth death rate, and it's a kind of a made up number. And if you take that out, the unemployment picture is much worse than people are saying. Is the employment picture bad? No, because there's no question that there are still a lot of people. If you want a job, you can still find a job. It may not be the job you want or a very good job. And it depends where you live too. But if you want to work in a restaurant, you can get a job. I mean, if you want to be a waiter or a busboy or bus person, doing that kind of stuff, you can find a job. I mean, it may not pay all that great, but you can find a job. Where in other times there's just been no jobs to be found. But a lot of people aren't willing to do that. Maybe they will eventually. And those jobs. But there's no question that the number of jobs, because remember that was like, there was the number of jobs available is shrinking quickly, and that only happens when the unemployment rate's about to go up. And so I do expect that to go up. I expect the unemployment picture to turn down. I think you're really going to see it as we get into the new year and more layoffs come on Wall Street. Earnings estimates start to come down. There's so much fraud. I mean, there's a reason that Meta was able to spend $10 billion on something that may not work for years. And because they had all this excess cash, they don't have that excess cash anymore. So many companies do not have that excess cash anymore. They can't spend it on, oh, let's try this and see if it works. Let's try that and see if it works. No, they're going to say, let's try this and make sure it works. And we don't need quite as many people to work on the things that we our bread and butter business. All those people we have hired to take these flyers because we can afford to have it. We don't have it anymore. Let those people go. And we'll keep the very best and then we'll merge them back in. It's things are going to get tougher next year. That's just what's going to happen, in my opinion. And you don't have to call for a repeat of 2008, 2009 to see the slowdown being worse. But let's just use our common sense. It's more than anything else. Too many people on Wall Street think that we can go back to what we had in the last 10 years without all that accommodation. If the Fed suddenly turns around and says, we're going to step on the accelerator, provide QE again, all over again, I'll have to change my tune. The fact of the matter is the Fed never does that until the market becomes cheap. Every time they've done it, the market was cheap. So I don't expect it to happen at all this time. And if it does happen, it won't happen until the market's a lot lower and a lot cheaper, and just in my opinion.
Right. So then we're going to be stuck with inflation. It's clearly not transitory, and there's no such thing as a soft landing. Now, I know that you also make trades on the dollar. So I don't know if you've seen this chart. I saw it on my economics class. The value of the dollar since the creation of the Federal Reserve, it looks like a GameStop chart. So that's going to keep going lower, but it's a strong currency against other currencies. But I know you trade the dollar. What do you have on that, Matt?
Yeah, we've done. I mean, and we've made money. I mean, I'll show you a trade, but how we made money. We trade the UUP. We made options in the UUP, which is a dollar ETF on the dollar. Again, going back to the tools that we have at our disposal. I mean, in the old days, you could have a dollar in a currency account. That would be one thing. But so many people, it's like, I'm going to trade wheat. We made over 100. We made how many percent? Several hundred percent on a trade on wheat. The old days, you would have had to open an account with the Chicago Board of Trade. That FXI trade that we talked about earlier, we had to find some broker in Hong Kong was willing to do a currency swap with you. You don't have to do that anymore. We have the opportunities. But here's the DXY dollar index, and you see how it's rolling over in a big way. It's starting to stabilize. It might on a short-term basis. 0.9. On a short-term basis, it may try to bounce back a little bit, but you can see that the trend is clearly changed to the downside. And that's why I sit there and I talk about gold. And if the dollar doesn't, in the next wave of this bear market, if the dollar starts to get hit, we got problems, because people are going to be, that's been the flight to safety, right? Has been the dollar. Well, if people start losing confidence in the dollar, we got some problems. Now, look at this thing in gold. See, we've made some nice money in some gold shares here. Look how it's made a nice little bottom here. Look at that on a technical basis. This is the 200-day moving average. It's breaking above that 200-day moving average, that purple line there. I'm going to get that out of the way just so it doesn't get too busy. And we're going to go here, and I'm going to go here. And see this trend line, that downward sloping trend line for gold, okay? It's broken way above that. A really nice base in here. It's made higher highs and higher lows ever since breaking above that trend line. When the dollar's going down, gold goes up. The dollar's going down. What's going to be the flight to safety trade? It's going to be gold. I know gold didn't work as an inflation hedge last year, and I stayed away from it. I kept saying it should be, but I'm going to stay away from it until I get technical an indication on a technical basis that it's breaking out. Well, we got that here, and we turned bullish. And sure enough, it's done very, very well here. It might take a little bit of a breather here near term, but I think it's going a lot higher in 2023. So again, we look at a bunch of different things. We look at the dollar. What does that mean for commodities? There's usually an inverse relationship between commodities and the dollar, and also for emerging markets, et cetera. So that's what we're looking. That's why I look at the dollar so closely, and that's why sometimes we make bets in it. And we, again, I'll go back to this page. The one sheet here. Shoot, it's hard to find here. Sorry. And there. Okay, I just want to go UUP 94, and bang. Again, this was I'll blow it up for you. Here was a trade, the UUP. Okay, we bought the September 23rd, $29 puts in the UUP. We bought them September 7th. Okay, these things went out. That we went up. The puts we bought went out several weeks, or almost 3 weeks, or over 2 weeks. But we sold the things 4 days later with a nice 100% gain in just 4 days. Again, taking advantage of what's going on in the currency market. So we don't just play in the stock markets. We play in whatever's working at any given time. We certainly don't get them all. But the problem, if you're only looking at one market, only looking at a few small number of stocks in the stock market, you're going to miss some great opportunities. And again, I understand why people do that, because 10 years ago, certainly 20 years ago, you couldn't trade them. Now you can, and we have the tools to do it, and many of them have the liquidity. Believe me, there are some instances where there's sometimes that people say, "What about this? What about that?" And I'll go, "Yeah, that's a good idea. I think it's probably going to move, but that ETF, the options of that ETF do not trade. You might be able to buy the position, but I don't know if you'll be able to get out of it." And so why bother? And it's just going to cost you too much to get in and out of the position. It's just not worth it. So again, sometimes it's just not there for us. But we try to find other ways. I mean, again, which happened last week with Micron. I saw everybody, the market makers and the Micron options were just making it too expensive. So we found another stock to trade the options, and we made 300% of our money. So there's I guess my point is that we're always looking for the opportunities. Every once in a while I say, boy, that looks like a good opportunity. I think that it's going to be too hard to trade it, too risky to trade it. We can lose all our money. And so therefore I won't. And again, it's risk reward, risk management. We're not here. I'm not here. We've talked about this in the past. I never bet more than 10% of my trading portfolio on any trade. People say, "Oh, geez, I lost half my money on one trade." It's like, whoa, don't ever do that. Don't ever do that. It's just in the options market, you can make a lot of money without betting that like that. Again, that's just my way. If you want to, I'm not going to tell people, again, I'm not your financial analyst, but I'm sorry, financial advisor, but I rarely go to 10%. Just the smaller bets can make you money as you build, and you can, suddenly you make a 5% bet, but if your portfolio is a lot bigger, that 5% is a bigger bet. So we try to do things in a way here. I'm not trying to make people billionaires overnight. We're trying to do things that take advantage of a time in the marketplace where volatility has been strong, has been high, and I think will continue to be high. And and we want to do it in a responsible way so that we can come out of this nice with some nice gains, and then be able to take advantage of it when the baby's thrown out with the bathwater. People are panicking, and we're keeping our heads while others around us are losing theirs.
Yeah, and I want to emphasize here, Matt, that we're not doing any complex option trades. We're not doing butterflies, condors. These are basic calls, basic puts. Anybody with a trading account basically has, you don't have to get approval for any of this stuff for the most part. It's the most simple type of options trade there is. It's just like buying a stock and then you sell it. That's it. But we got a lot of people coming in here out of the woodwork, Matt, that are joining in late. So I just want to recap really quick what exactly your live room consists of, right? For the people that joined today for the end of year special, right? So you get 15 plus trade alerts with entries and exits per month via Zoom call, and that's Monday, Wednesday, Friday from 12 p.m. to 12:30. Then you get the live trading room, which is 3 to 5 daily trade alerts with entries and exits. It's open 8 a.m. till 5 p.m. And we do have push notifications on everything that Matt is posting in the chat room. Separately, you will also get access to the live Zoom call for the chat members. That's on Tuesdays from 11:30 to 12:30 Eastern. Separately, you get 6 stock swing trade ideas per month via email. You can get text alerts for free if you want. And there's a whole bunch of education. This whole session has been education and really showing how you can use that education to profit from the markets. It's not just education, like trying to teach people trigonometry, who knows if you're going to use it. This is stuff that you can actually use today and start making money, right?
Right. That's the whole idea. I mean, it's it's funny. This week is going to be a weird week. We only got 3 days left before the end of the year, but there's still some good ideas that we can trade. This week I'm gonna keep it a little bit tighter, just because it's a very thin market with so many people out. Tesla, and I'll show you Tesla in a second. I'll look at that chart. But like I said, it's a thing where we are we're given ideas every single day, and sometimes it's just a couple. Sometimes it's just a couple of trades. In a given day today, I think we did 2 trades. But again, it's very quiet and the volumes are really low. But other people did more than one trade. And but believe me, there's going to be lots of trading to be doing as soon as we come out of the gate into the new year next week. And it's again, this is it's not just a bunch of education where some people say, hey, this looks good, that looks good. This looks good, that looks good. Let's buy this. Let's buy that. Let's take a profit in that. We're doing several trades a day. In some cases, it can be quite a few trades. But it's we're not trying to turn again. We don't make any money by turning your account, so don't worry about that. That's not. You don't trade through us. So we don't. If I'm giving you ideas, somebody else is making the commission, not me. So we're just trying to help people profit from what is a very, very difficult time.
Right. I mean, look, we are completely unbiased to the markets. Right. We don't care if it goes up or down. We don't have an agenda like other news places where it's like we have to pump the markets. We don't care if it goes up or down. We'll make money either way, buying calls or puts. So remember, I'm not a journalist. I'm nothing like that. I'm not a reporter. I'm not reading from a teleprompter. I'm a real trader myself. And I can tell you that, like when I started trading options without any there was no such thing as Matt Maley helping you in a chat room, a chief market strategist. I blew up my account twice because I was trying to wing it. And I'm telling you, 2020 might have been the year for that, but this is a totally different environment. Not even the people that have been around know, look at the people, on the news, like they're down 80%, still holding to that damn PayPal and stuff. So this is a trader's market, right, Matt?
Oh, no question. And it's a trader's dream. I mean, it's a tough market, but that's why it's to try to trade it alone is like I said, the best pros in the world do not trade it alone. Why should you? But it's a trader's dream, and it's been a really good year for active traders, and it's and a really tough year for people who just sat back and watch it all happen. Again, it's just something that I think is going to continue for a while, and it's just people are. I mean, it's in their best interest to be bullish. It's for their career moves. Nobody wants to call for a reset. As I said, nobody says now. People are just finally willing to say that we might have a recession, only because the Fed has said that we have some more pains coming. But I mean. And for the most part, nobody's going to tell you that we're in a bear market until we're going to have a bear market until we're in a bear market. The vast majority of Wall Street didn't tell you that this year until the market was down 20%. Then they had no choice. They kept saying, no, I don't think it'll be a bear market. I don't think it'll be. Finally, they had no choice. It was in a bear market. Same things happen with recession. Most of those economists will say, well, probably 70%, but they won't say, yep, we're definitely going to have one until we're already in one. That's just what they do. It's what's their job security, because they do not want to be the one that said, oh yeah, you're calling for the end of you're calling for a recession, and all of our people pull the money out of the firm. But we don't want that. So I'm just sorry, that's the way it is. And then you have other people that whatever. I just want to we just try to be honest, and I'm not saying that people aren't honest. They're just they just have a certain I forget the famous thing. It's hard to convince people of something when their job security depends on believing something else. And that's what a lot of these people, their job security believe, their jobs depend on the stock market going up over time. And therefore they say they're lying. That's what they really believe. I just don't keep an open mind, because it just doesn't. That's the way human nature works. And that's why the best people can make money in both up markets and down markets. Anyway, yeah. I kind of am going on. We've been going on for almost 2 hours, so I don't mean to kill you with all this stuff. But there is one stock I just want to go over, because I'm sure everybody's noticed it today, and that's Tesla. And I'm just going to tell you one of the trades I did. It's
Let's give a quick shout out though to Jerry, our most recent family member here that joined the Stock Picks chat room.
Great to have you here. Congratulations, Jerry. Great to have you on board. And just we want to look what we said in Tesla and how we've worked it pretty well this year, very well this year. But when the stock, well, first of all, I'll go back, but last year when people were, I was saying the stock could go lower, and people thought it was crazy because they said Elon Musk is a genius. I didn't say Elon Musk wasn't a genius. I'm just saying that the stock. I said, how could you say the stock couldn't go down a lot when even in its best year, it's had several times where it's gone down 30 or 40%. Why can't it go down now? But anyway, here's the situation we're facing. When the stock got to 200, I was talking about it, saying if it breaks below 200, it's big trouble. And sure enough, it broke below and it fell down. Okay, we covered. We sold some calls down. I'm sorry, some puts down there after making a nice profit. And people are saying, when it bounced, I said, should they sell it again? I said, let's wait for it to get back up to 200. It sure did. We bought more there. It came back down. Other people have been taking it all the way down here. But again, we broke below it, lower high, lower low, lower high, much lower low. I will say, I did try to buy some calls last week, very small. I mean, tiny amount. We had some nice profits. I said, I'm going to do a lottery ticket. A lot. Didn't care. I didn't care. I was like, I'll take a little lottery ticket. When the stock was about 125, I bought some calls. Other people today were in the stock and buying puts in the stock, making really nice money in the chat room. However, late in the day, I went in and bought a tiny amount of calls. If I lose 100% of my money, I won't even think twice about it. It was a very small amount. But see how this RSI, remember we talked about the FXI? It's not as oversold as it was back then, but it's getting there. If this RSI gets below 15, you want to be thinking about at least buying some. You don't want to back up the truck. The momentum is just brutal in this stock, brutal to the downside, quite obviously. But see how oversold this is getting? It's never been this oversold. Can it get more oversold? Yes, but I rarely see something get below 15. Now, there are other overbought and oversold reasons, stochastics and such. Let's look at another one here. It's called the Bollinger Bands chart. Hold on a second. This tells you if the stock is trading more than 2 standard deviations below its 20-day, not its 200-day, but its 20-day moving average. And sure enough, it is. The one thing, though, as you can see, is when it gets below this green line. You can see the problem. It's been riding that line all the way down. It hasn't really gotten well below it like it did here before it bounced. So it's not. So maybe we could get one more big thing below it. Maybe that takes the RSI below 30. But I did buy some very late in the day. I bought some calls, $120 calls. Again, if it goes again. I'll open up tomorrow. It could very easily be worth half what they're worth, and that's okay. I'll sell them, take the loss. It'll be like I said, if I lose 100%, it won't be in. But if I win, if this thing pops, this thing could pop to 130 tomorrow. It literally could pop to 130 tomorrow. I'm not predicting that, but if it does, I'm going to make 10 times my money. Okay, so the risk reward is worth it, right? Again, if I lose it, I don't really care. If I win it, again, I'm not going to retire on the money I make, but it's going to be a nice little profit that I can use to build on something else. But look at that tomorrow. If you see the RSI, the relative strength index below 15, take a serious look at it, but do not pack up the truck. There's so many negative things out there on this stock. You we call them lottery tickets for a reason, because most people do not win on lottery tickets. They lose on lottery tickets. In fact, they lose 100% of their money on a lottery ticket. But if they do win, they win big, and that's why we call it a lottery ticket. But do not, if you're out there buying thousands of dollars in lottery tickets at any given time, you shouldn't be doing that. Okay, and that's why you shouldn't be doing that in some of these crazy options. But I'm doing that here because it's going to give me 3 days for this stock to bounce back in a big way. Just take a look at it. Do not spend a lot of money, but take a look at it tomorrow. And pick a price. You can do the $110 calls, $120 calls, whatever. I've bought the ones that for 120, and we'll see what happens. But this stock, like I said, on its relative strength index, is the most oversold it has ever been. And
remember, we were talking about like Tesla going under 200 last month.
Yeah,
and it was like, no.
People say no way, and I said, yeah, it's going to. When it goes, if it drops below 100, it's going to 170, and I felt good there. I must admit, I didn't think it would get down. It's getting towards 100. Looks like it may get to 100 tomorrow before it bounces. But even if it's going to 80, maybe it's going to $80. I don't know. Maybe it's going to $50. It's going to bounce before that, though. If nothing goes in a straight line. And look at these big bounces along the way. Look at this bounce right here. Okay, the stock's more oversold than it was there. This stock bounced in 3 days, which would have the equivalent of going there 3 days, 20%. That would take the stock to $130. I'd make almost 10 times, well, maybe not 10 times the money, but I'd make I'm going to make 700 or 800% on that trade.
Matt, isn't it like, I mean, look, it's great to trade all these, during the volatility, but also, man, these are some great opportunities for people to kind of add to the long-term bucket, which, I mean, you are more than qualified, I feel, man, because you're a trader, you're an analyst. You've seen this before. You've literally traded through, like, I don't know how many recessions or crashes, like 4 or 5.
Yeah.
Like,
Oh yeah. I was there in the '87 crash. I was in my sixth year in the crash. I mean, so I wasn't a young. I mean, some people talk about, oh yeah, they were the first year. Well, the first year they didn't really know what the hell was going on. But I was on the train. I've been on the trading desk for 5 years in 1987. I saw that happen. I learned a lot at that time, a real lot. And in the months, not just on those days, but in the months after it, learned what really goes on in the marketplace. And I learned that again when the .com bubble crashed, and when we came out of it, same thing as the great financial crisis, and when we came out of it after the pandemic, and when we came out of it, et cetera, and a lot of smaller ones in between. You learn what really goes on in the market, and it's not always fundamentally. Believe me, short-term moves are frequently not fundamentally based. And my favorite saying, if you put on my tombstone, hopefully a long time from now, but there'll be the market. All people on Wall Street say the market is always right. It's not always right. The market is only always right eventually. And the market wasn't right at the beginning of this year, and the market wasn't right at the top in 2000. It wasn't right at the bottom in 2003, and, et cetera, et cetera. You think Bitcoin was right at 66,000 or whatever the heck it was, 65,000? And the market is only right eventually. And that's how people get, I mean, that's how Warren Buffett got rich. Okay. He became wealthy because he bought when everything became ridiculously undervalued, when the market was wrong to the downside. He hasn't been so much, as far as I know, never shorted things. He's not a short guy, but other people have done it on both sides, where they've shorted things. We've all heard stories about certain people have shorted things and made fortunes. Obviously, the Big Short being the big one, when all that the mortgage-backed securities, of course, those made that. But again, the market was dead wrong at that time. That's what we're trying to take advantage of here. It's wrong. It's not just wrong at historic levels. It's also wrong on short-term basis. I think Tesla is getting wrong on a short-term basis just because this reading rarely gets as oversold as it is right now. And I'm really hoping for a gap down at the opening tomorrow. Then I'll get a little bit more aggressive. And again, I'm not going to back up the truck and buy it hand over fist, but I'll buy it. This thing opens down near 100. I'm going to be looking to buy some more of those call options. Anyway, we've been kind of going for 2 hours, so we'll kind of leave it there if we can, but we'll wrap things up or whatever. I know that you got a few things you want to wrap with before.
So we're going to show. All right. So I have one last question, and then after that, you can give us some closing remarks, and then after that, I will show them the live room. I will show them the trades that you've been making in the live room, so they can see them, and also they can look into all that stuff there, right? So now my last question here, Matt. Throughout all your years, 40 years in Wall Street, do you think the Fed is responsible directly or indirectly of every market crash correction we've had through their programs?
No, I can't, because but they usually are. I mean, look what happened in 2020 with the pandemic. The market went down 19 or 20%. Went down 36%. That wasn't their fault. I mean, that was a pandemic. They didn't cause the pandemic. If anything, they deserve kudos for bailing us out when the economy completely shut down. But what the problem is, they have caused a lot of them, and but not all of them. And The one thing that people give too much criticism to the Fed is that sometimes they should. I mean, last year they should have pulled. They should have caused a correction in the summer of 2021. If they'd done it then instead of waiting, we wouldn't be anywhere near as big a pickle as we are right now. So they always wait too long. They wait too long to ease, and they wait too long to tighten. If they hadn't waited so long to tighten, we wouldn't be in as big a trouble as we're in today. So, but to answer your question, I have to be honest. I'm not going to be one of those Fed bashers all the time because sometimes, I mean, you know, what Volcker did 40 years ago when he pushed us into recession, it was the right thing to do. It was what we needed to do, and it was helpful for the long term. And what the Fed did in 2020 caused a bubble, but we kind of had to do it because if they hadn't, the economy was going to shut down. So there's my answer there. Again, I'm not afraid I'm not to be afraid to be critical of the Fed. Believe me, I told them they were morons in the summer of last year, but I want to be fair as well.
Right. Okay. So, Matt, before I start showing them the live room with the trades, I'm already kind of showing it, but I'm going to, kind of explain it for all the people that join. We'll show them the trades. Any closing remarks on the markets and why the folks should try the chat room here and trade with us all day?
Yeah, I just think the biggest thing is I mentioned it before, is trading. If you're going to be an active trader, doing it alone is just too hard. There are a very tiny number of people do it. There's a handful that do it successfully. Handful, and the best. Even the best of the best of the best are constantly talking to other people, and that's what we're doing here in the chat room. Where we're talking to each other, giving ideas. And not just giving ideas on specific trades, but giving, hey, did you notice this? I mean, we had situations where people came in and said, hey, this time, well, not this time last year, but just as the beginning of the war in Ukraine started, it's saying, I live in Eastern Europe. This is what's really going on. And then the other person said, I lived in Ukraine for 15 years. This is what's going on. Or I've lived in this other part of Eastern Europe. This is what's going to happen going forward. This is what Russia always does. And one guy was in the military there. I mean, it was just amazing what we learned there. People going into this Christmas, talking about, hey, I'm a UPS driver. I used to work for Federal Express. I know what's going on here. I'm in the real estate business. I'm in the automobile business. This is what I'm seeing. It's just amazing what we learn from each other. And we can sit there and look at charts all we want and listen to the media all we want. We get people who are on the ground in these areas, or even if they're not in them anymore, they have experience in those areas. It's just something that you're not working alone. You're getting really good feedback. And again, I just talking about what the Fed is doing right now, whether they like it or not, that's what they're going to do. They're going to keep interest rates high. Whether they stop easing soon, stop tightening soon, that's fine. But unless something breaks, they're not going to pivot completely and start loosening. And if and when they do, it'll be after the market's already broken, not after the market's already gone down a light, because that's what they always do. They always wait until the market's down before they do it. And besides, it's much more effective. Their stimulus is much more effective when the market is oversold and cheap. And they do not want to lose their credibility by doing all sorts of things when the market is still expensive and going down, and their attempts fail to save the system. They want to be still seen as the people can save it. And it's like anything else. It's a lot easier to lift something once it becomes a lot lighter. And once the market washes out, it becomes much lighter, and it's much easier for them to pick it back up. Rather than trying to hold it up when it's way too heavy and overweighted anyway. Anyway, so that's my thing. Don't trade alone. Don't trade alone. Don't trade alone. Good luck with everything. Good luck in 2023. Thanks for being here. Thanks for those who joined us, and we'll see you in the chat room tomorrow. And we'll see you too real soon, Rodrigo, and talk to you in the chat room.
All right, I'll see you in the chat room. Chief Market Strategist Matt Maley. All right, there you go. Matt Maley, thanks for being here, man. I appreciate you. I'll see you in the chat room. All right.
Thank you very much.
Okay, all right, folks. So now we are going to show you the live room for all the people that joined. And if you did join, you still have a chance to do it. But I want to show you the trades from Matt and everything that comes in, the format, all that sort of stuff. First thing I do want to show you, it's the live room. It's blue. It looks like this. As you can see, there's 90 people that are in there right now. And this is Matt's, only Matt can post in this room. You can see there's 2 channels. Matt's important messages and inner circle chat. The inner circle chat, everybody can post. As you can see, who is this, Monty? I don't know who this is, but as you can see, we do have a lot of fun in the chat room also. It's not just about, that's Elon in the back, that's funny. So there's a lot that goes into the live room, education, as you can see, hot memes, but more importantly, look, we're here to trade, we're here to make money. It's a community, it's a workplace. We have people that work full-time, people that work part-time, and they're still able to benefit from the chat room. And I'll show you why, because we do have push notifications available. That's guaranteed for sure. I use them, I get them on my phone. I don't even have to do anything. They just pop in there, right? So whenever Matt is posting on his chat and on his channel, you will get that notification. So in the inner circle chat, everybody's posting, including Matt. So it's a full conversation. It's a 3-way street between you and Matt and you and the other members. Then you have this other channel, Matt's important messages. This is where he's posting entries, exits, market commentaries. All right, Deborah, I'll see you soon. Hope everything works out there. Happy New Year. So this is the format, right? As you can see, he's also going to let you know, like, FYI, I'm going to be on CNBC Asia this evening at 8 p.m. So he's on the news all the time. They ask him questions about the markets, but the trades that you get, he's not talking about those trades, obviously, anywhere out there. These are just for the chat members. And what he does, like I told you, as a chief market strategist, he provides institutional research, right, to actual institutions, okay, analysis on U.S. markets, global equity markets, and then they make their own trading decisions or investment decisions from there. You as a retail trader, you benefit from this because you get that analysis, but on top of that, you get the trade, the actionable trades on how to profit from what's happening. That FXI trade, that's a Chinese ETF. The difference between Matt and all these other people you watch on the news is that he's not only a U.S. equity strategist, he's a global equity market strategist. So he's looking at different economies, currencies, and how we can take advantage of that as traders. His 40 years of experience, basically, you get for joining the chat room. It's that simple. So in the push notifications, all you have to do is download the Benzinga app on your phone. Once you download that app, log in with your credentials, and you will automatically get the push notifications sent to you. So every time, like he's putting here about the interview on CNBC or selling TSM puts here, all these things. He's going to sell TQQQ December 23 puts here. I mean, obviously, those did pretty nice. So all of those alerts would go to your phone via push notification, okay? So if you have a phone and you have internet, it's all you need, right? And you need a brokerage to make the trade. So this is the live room. This is open Monday. This is open 24/7, but Matt is there from about 9 a.m. till about 5 p.m. Eastern, separately because it's the end of the year and we're just trying to give it all out here. We added a lot of things to the live room, especially for the people that joined today, right? So there are some calls that, remember the Monday, Wednesday, Friday calls that Matt does. These are some of the old ones that we had there for the strategy sessions, but here you can see that you'll have inner circle sessions. So the people that join the chat room, just the chat room, they have access to the inner circle sessions. The elite sessions are for the people that joined today, because it's an additional 3 calls a week. It's Monday, Wednesday, Friday. The inner circle sessions are only Tuesdays. Today's Tuesday, so let's go ahead and I just want to show you more or less how these calls go.
Okay, hopefully we are on here. I started talking, and I think a proven fact now. Everybody should take. I mean, every single time the Tom Brady has lost the Super Bowl, or 3 times he's lost, that year has been a disaster for the stock market. Every time, perfect record. Now the other one is also a bad record. Is if Tom Brady doesn't make the playoffs, and if they lose to Carolina, they're almost certainly not going to make the playoffs this week. And Carolina looking good. So Tom Brady, he missed in 2002. What did the stock market do? Got crushed, down 30 some odd percent, was down 50% at its worst level.
Okay, guys, and I just wanted to show you a little bit so that you can see the format of how that call goes. As you can see, you have a live chat on the right side, and you have all the members. We got Gary Bird in the house. What's going on? Bill D, Brandy, LJ. I've signed up like 90% of the people that are in this room. I can tell you everybody there is serious about trading, serious about learning. It's a great community to do all those things, right? Plus you have all this technology, Benzinga platform. So, okay. All right. So I just wanted to show you that really quick. And then I want to show you the other sessions. You can hide the chat if you want. All right, let's go back to these videos. Okay, so that was the inner circle session. The elite sessions, which are Monday, Wednesday, Friday, those are well. Let me check how these are.
Now,
Okay, these are audio only. So this is like, it's a live call. It's still live, but he's not sharing his screen on these ones that are Monday, Wednesday, Friday. Okay. So I wanted to show you some of those videos. They go out, you'll have that call Monday, Tuesday, Wednesday, and Friday. So 4 calls a week. You get 4 calls a week. You get in these calls, Monday, Wednesday, Friday, you get about 15 trade alerts, entries and exits. The live trading room has 3 to 5 daily trade alerts with entries and exits. The Zoom call for chat members has updates on the chat room trades and updates on that, managing those trades. So you're also going to get trade alerts and market updates in that Tuesday call. And then 6 swing trades per month sent to you by email with entries and exits. And these are stocks. Okay, these are not options. These are stocks. The 6 per month. Of course, you get the ongoing mentorship. You get the ongoing education, market education. Everything is pretty much included in this with Matt. So let me show you the other trades that I'm talking about, the email trade alerts. You will get those by email or text if you sign up for it. But then you also have this portal where you can get full updates on the trades, right? I mean, some of these trades are doing really nice, Price of posting 68, 66, currently at 72. Price of posting 181, current price 220. I mean, I'm just going through the most recent ones here. Okay. Triona has an interesting question. If we sign up, do we get access to retrospective calls? Yes. You get access to, look, all these other calls, these past calls are filled with education. What's the last time you sat down with a chief market strategist for an hour? Like, the retail traders, we don't have access to that. Okay. Now with Benzinga and with this platform that we put up with Matt, you do have access to that. You have access to a chief market strategist and all the education that goes with his analysis. Keep in mind, these institutions are paying millions of dollars for his analysis on the markets. You're not paying like nothing close to that to get his analysis, let alone his trade alerts. Okay. So yes, Triona, you will get access to all the prior calls, all the prior videos, all of the juicy education that is included in each of those, including discussions on the markets, the Fed, how the market reacts with certain types of things that are happening. So it's full of education, right? I know people that are in the chat room, they're not even making a single trade. They're only paper trading and they're learning and listening from Matt. Why? Because they've heard the horror stories of people trying to wing it. Right. So it's not, it's smart to do that as well. Some people are ready to get in there. That's fine. You literally, all you have to do is follow the trades that Matt is posting, clear entries and exits. So you don't have to, reinvent the wheel here. Matt's already, he has a strategy. He has a setup. He has a way of doing things. He's been doing it for 40 years. That's longer than most of you, including myself, have been alive. So it's a great opportunity for you guys to really get started with a professional trader, right? A professional analyst, chief market strategist. It doesn't get much better than this. People with 40 years of experience are retired. And Matt has at least 20, 30 years, that he's going to be. He's passionate about this, as you've seen. So it's great, right? Let's see. Do we get to see Benzinga? Not sure if I understand that question, Rabi. But yeah, if anybody does have questions about the chat room, ask them now while we're here, while we're live, especially because you get bonuses if you sign up while we're live, you get additional stuff. So let me show you this other thing. So this is one of the calls that I was showing y'all, and then these are some of the old videos, but you don't need to, that's fine. Okay. All right, so you can see there's also these trades, right, where you can see what Matt is doing, right? You get a clear entry, clear explanation, everything. Well, Ravi, what we're doing is really nothing crazy. I mean, we're buying calls and we're buying puts. You buy it to open the trade, you sell it to close the trade. There's not much more to it. He will give you the exact strike price, expiration. Let me show you, okay? Because if you're new to trading options, like this is for you 100%. So look at this. He's gonna buy some, Matt says that he's gonna buy some TSM December 23rd, $74 puts. That's literally all you need. That's all you need. You go to your brokerage, you look at the contracts, you pick the exact contract that he's literally telling you to buy. Okay. If he's saying it's a put, you buy the put. If he says to buy the call, you buy the call. He'll tell you when to buy, he'll tell you when to sell. This is the definition of hand holding, my friends. The definition of hand holding. So and yeah, you get access to all the videos, Robbie. And many of those Tuesday calls that Matt does turn up to be very educational, because we're not just talking about markets, but also Matt, people. It's a live call, so people can chat and Matt can read the chat. So he will answer questions about about anything really. I mean, what didn't I ask him? I always ask him about everything, because he says it as it is. And he has a very unique insight, not just from a trader's perspective, but also from the analyst perspective as well. Will he explain why he chose that put? Yes. But this is something different from what you and I talked about, Hopeton Peart. I think that's Hopeton Peart. Yeah. Well, yeah, I mean, yeah, I get what you're saying. Okay, yeah. So this is something different from what you and I talked about, but yes, if Matt will explain this stuff. And here's the reason why I do like Matt's chat room, and why I think it's perfect for people that have full-time jobs. Because not only can you have this open on your phone, all it is to have a Windows open on your laptop. If you have a laptop and you have your Gmail open, or you have Instagram or any of these things open, I don't see why you cannot have this chat room open. I know a lot of people in this chat room that are working full time and they still bank on the chat room. People that even work part-time. We have full-time traders, part-time traders. We have people that maybe only trade around certain market events. You don't have to be trading every single day. You don't have to make every trade, right? But keep in mind, we are trading every single day in the chat room. Matt is posting all the trades, all the setups, and especially if since you're going to get access to these calls 4 times a week, like, you will get a ton of education. You will get a ton of market updates, trade updates, and you don't really have to be in a live session to take advantage of this. Why? Because it's volatility trading, and then you get clear entries, clear exits. So you can have it open on your phone. You can have it open on your laptop. You can even put sound alerts. Look, you see this bell? These bells are yellow, okay? That means that whenever somebody's posting there, there's going to be like a little pop sound, okay? Now, if you want to take them off, you just click there and you see that the bells are not yellow anymore. So what that means is that the sound notification is off, right? And you can turn them on and off if you want. It's up to you. But this is, really totally up to you, right? So you can have it on your phone. You can have it on your laptop. You can have it on your iPad. I know I signed up somebody who's a truck driver. He's driving nationwide. He's got an iPad hooked up on his truck so that when he's driving, he's got that chat room open. So look, I mean, money's not going to fall on your lap. All right. You have to put some work. Literally, all you have to do is have the chat room open. It's really not a lot to ask for the kind of bank you can make there. Then you also have the push notifications, which go directly to your phone. So you get the alerts. I mean, I don't know if I have one here that I got from today, but basically you don't do anything. Like it goes straight to your, all you have to do is have internet, right? So there's really no excuses at this point, right? Now this chat room, the Inner Circle chat, I just want to show you a few things here. Biking Chef, I know this person. What's up, Army Vet? There's a ton of people here that are always Value Play. I know Value Play. Dave, James Donahue, what's up, brother? James Donahue has been helping a lot of the new traders. I mean, as you know, I told you we have a great community. I launched these chat rooms myself last year, and I've been putting a lot of work and thought into making these chat rooms better. So I do want to give a shout out to Vin, Tammy, and Neil and Harvey that have helped these chat rooms become better, not just with the coding side of it, but helping these features, like the push notifications. I've been asking for these for a while, and we finally got them. So that's a huge win for us chat members. Let's go. All right, so what's next? What more do you want to see in this chat room? You can always email me, text me, call me. I'm always open to feedback on how we can improve the room that we currently have, how we can make it better. I think it's a great place. Look at this guy. 75% had to take profit. And then Maylee says that was absolutely the right move. I mean, Dave, too. Well, there you go. Dave had a great day. He made 75%. You could be doing that as well. I mean, these are real people. These are real human beings. These are real traders that are actually making money in the markets. All right. I know most of retail loses, but that doesn't mean you have to do that. 1 second, folks. All right. So everybody can see the chat room there, right? Okay, so in that chat room, you can see that everything is being posted. Anybody can post there, including Matt, and Matt can comment on that. Now, let me show you something here. You can private message Matt. Look at this. For all members that are watching also, just know that you can do this. You can direct message somebody here. So let me just put up Matt Maylee. What's up, Matt? So now I started a private conversation with Matt. Again, this is not open to the public as far as like when you have a private conversation with Matt, where you can have, direct communications, right? If you want to get specifics into your account or whatever, you can do that. This chat room allows you to do that. So I do want to give a big shout out here. Lainey, Marcus, welcome to the family. Let's go. Big shout out. Make sure for you that joined right now, make sure that you are checking your emails because you're going to get trade alerts in your email. Make sure that you're going to these calls, okay? Monday, Tuesday, Wednesday, Friday. You got 4 calls a week with a chief market strategist. I don't know what else you think is more important than that, but that should be top of your list, making sure that you attend these live sessions. And also try to be in the chat room as much as you can, because as you can see, people are making some good money there, and you're going to learn a lot. You're going to be part of our community, this is probably the best. I say hands down, this is the best options trading room in the world. Or it's not because I launched it with Matt, but it's because I know the people that are there. I've seen the progress in them since last year when we launched it. And it's great to see that people have been able to benefit from this. Right? You wouldn't think so, but it seems surreal sometimes that you can make money in these rooms, but it's a fact. Go in there and you can talk with the members. You can see it for yourself. That's really what I think is great. I wish I would have had this when I started trading, but I didn't. But now that, I've been able to learn from Matt a lot, it really is a game changer. It really changes the game, because if you try to do this on your own, good luck with that. I mean, you're just going to end up like all these other retail traders that they're blowing up their account and they just never come back to trading. How many account blowups can you really take? That's the question. Like, how much pain are you going to take in your account, in your finances, in your savings, right? Until you finally figure out, if you ever do. The best thing that you can do is follow a verified professional trader. And we're not talking a regular trader. We're talking chief market strategist, Matt Maley. You've seen him on the news. You've seen him on Bloomberg, CNBC, Europe, all these places. He's all out there. He's a career man. You got to respect that. He's been doing this for 40 years, and this is all he's been doing forever. He started in Salomon Brothers, which was the biggest trading desk, one of the biggest trading desks in Wall Street during the late 70s, 80s, until it got bought out. Then director of trading at Merrill Lynch. I don't even know if he mentioned that. He was a director of trading at Merrill Lynch, where he managed the two biggest funds in the world, Mutual and Hedge, Fidelity and BlackRock. Then he's been a chief market strategist, an analyst for Miller Tabak for the past, I think, like 13 years, something like that. So he's got an impeccable track record. I don't know anybody else out there with that sort of track record that is doing this to help retail traders. In other words, the little guy. Everybody's always trying to screw up the little guy. That's a fact. But really what these chat rooms do is that we empower the little guy. We empower average retail traders to be able to make some good money. All right. Typically, retail ends up holding the bag. That's just the truth. But if you don't educate yourself, if you don't really find, somebody that can really help you, genuinely help you, right, it's going to be a lot tougher for you, because you're going to spend so many years losing money. There's people that I've talked to on the phone that, like, they've been trading for 10 years. They've been losing money for 10 years. It can happen if you let it happen. And that's kind of why these chat rooms are here. They're here to give you a helping hand and show you that, listen, there are ways to make money in the markets. There's a lot more ways to lose money in the markets. And like, you can get so creative on how to blow up your account. You can go do the craziest, dumbest trade. You can follow, the dumbest gurus out there on Twitter. Again, there's so many ways for you to blow up your account, but there's only so many ways to really do things the right way. I'm not saying there's a million ways to do things the right way, but for sure, you do need a mentor, a guide, an instructor. And I don't mean no regular instructor. You're not getting any regular. Regular is not a word in this chat room. Matt is above and beyond from what you could expect from an instructor, right? It's one thing to be a teacher. It's another thing to, actually have done it successfully and keep doing it, right? I've been following Matt for these past 2 years, and I can tell you that his analysis is on point. Even though he might be the only person saying something, he'll stick to his guns, and he's right. When he's talking about the metals and mining sectors, it was just him. Like, obviously there's a few more other people, but the big crowd, the herd on TV, on the news, they were saying one thing, and Matt was saying something different. Matt turned out to be right. Matt has been bearish on the market since like the beginning of the year. I've been making some good money shorting with him. And if you would only be looking at CNBC or these places, that they would have you convinced that every bottom is the bottom, and you probably would have you've lost a lot, if not all, your money just listening to them. So Matt has been consistent with what he's been saying, that the markets are going to keep going lower since the beginning of the year, and that's why his chat members are making a lot of money, because they're not listening to what the news are saying. They're listening to what Matt Maley is saying. Keep in mind, every news place, they have an agenda they're always pushing, pumping markets, whatever, pumping crypto. They got sponsors. You know how that works. I don't have any sponsors. I'm here to help the little guy. I'm here to help you, Triona, Jerry, Marcus. I'm here to help you guys be successful traders. I want all of you to be successful, to make a lot of money, to not just make money in the chat room, but build relationships, make friends there. There's people, like, that's a workplace. There's people that get up in the morning, they scan the markets, and they're in that chat room the entire day. That's their job. That's how they make money. That's how they bring income to their life. Now, if you cannot do it full time, that's fine. We got push notifications that'll go straight to your phone. So there truly is no excuse on why you're not joining the room. But look, if you want to join the room, really, it just comes down to one thing. Do you want to make money or not? right? If you want to make money with Matt, it's very simple. The link is there. You join, and that's it. You're trading with us tomorrow, and it's good for the whole year, unless you do the lifetime. But if you want to keep figuring it out, if you want to keep gambling your money away, if you want to keep winging it because you think you got it, look, I mean, it's your money. It's obviously, if you want to blow up your account, by all means, go ahead and do it. But that's really what we are trying to avoid here. And, we do that really good here. We help people not do that, right? There's a ton of people that have, that I've talked to personally that they've told me that they've blown up their accounts like 6 times. People that have lost close to $500,000, and they just can't keep doing it. And I'm asking them, how did you get so far? Like, why did you never look for anything? And it's just pretty simple. Sometimes we got to put our egos aside and realize that we need some help, especially if you're down and in such manners. We have a big shout out here to give Triona, new family member. Let's go, everybody. Welcome, Triona. All right, Triona, make sure to be there in the chat room. I want to see you tomorrow there. So be there early if you want, 8 a.m. Matt usually clocks in like about 8:45, 9, unless we have an important date like a PPI, CPI number coming out. Matt is going to be there. I remember last time we had a CPI print come out, and he's like, okay, if the CPI comes above this number, buy puts or something like that. So he gave us the trade pre-market, but when there are dates, important dates that are out there, because we do trade these types of dates, we trade the volatility, right? I would even go as far as calling this like volatility trading, what Matt does, and he takes advantage of what's happening out there. Again, the markets could be going up, they could be going down. We don't care. We don't care. We just want to be able to take advantage of the volatility, okay? If we don't take advantage of it, what do you want to do? Like credit put spreads, iron condors make 20%. That's fine. Nothing against that. But then when you're seeing these numbers that we're putting up, when you're looking at that trade that Matt did, that 8,000% gainer, these 400% gainers, you're never going to do that with spreads or condors or butterflies, diagonals or verticals. The math is just not there for those types of trades. That's why this is called volatility trading, because we are able to take advantage of these moves that happen within a matter of 1 to 3 days. Volatility has its own schedule, right? Some people ask me, is this a day trading chat room? I mean, volatility doesn't really work on any set schedule. We're preparing for a move. We prepare for this move. This move could happen today, it could happen tomorrow or the day after, but we're preparing for that move. Obviously, nobody can call when it's going to happen, but Matt has a good sense of this based on his 40 years in Wall Street. You for 40 years, and I'm going to call you. Like, if you got to pick between a plumber that literally just started today or a plumber that has been doing this for 40 years, you know which one you're going to call. You already know. So experience has a price. Experience, I mean, you can't buy experience, really. You know why? Because you can't. Because Matt actually went through all those 40 years and still going to learn all these things, these ins and outs. And even though you got a gut feeling sometimes when it comes to trading, we're like, oh, I feel this way. I feel like, the markets will do this or that. Your gut feeling is not as educated as Matt's gut feeling, if that makes sense. And that's why experience is really so important, because everybody wants it. Everybody wants experience, of course. Each and every one of us would want to have Matt's 40 years of experience in trading, but you really can't get that, right? The closest thing you can do is trade with Matt, because he applies his experience to his trades. He's making every single trade. Every trade that he's posting there, he's doing it. And he will post it exactly when he does it. He will give you a clear entry, a clear exit. Everything that's posted there is a trade that Matt has made. So as an example, let me show you this. So he's going to tell you, look at this. Let me see what date this is. I just want to show you how like this this happens often. It's not like it's random for Matt to make money. Like he's been in the game. Okay, so this was last Thursday. Let's see this. I'm gonna sell some of my TQQQ December 23rd, $17 puts. They're up about 140%. I'm keeping a small position in them, and I'm keeping the TQQQ December 30th, $17 puts for now. So, I mean, these things are not uncommon for Matt to make money in the chat room. Now, those 8,000% gainers, yes, they don't happen every month. Like we probably get like 2 a year of those trades. But I'll tell you, one of those sets you up. I remember when that trade went out for the FXI, and there were people that held on to those FXI calls, ended up making like 14,000%. My phone would not stop ringing. My email was blowing up. People like, hey man, thank you so much. Like I made so much money with this trade. I was not part of the trade because I was busy working on the chat room, like helping people get in the chat room. But I mean, people send me Christmas gifts, cards, like all that stuff, because they were able to make a lot of money in the chat room. I mean, and it's Matt. Matt is, you should be sending all that stuff to Matt, not to me. Because Matt is really the one that's been putting in the work. Matt's the one that's really has the experience of all this stuff. And also, I want to give a shout out here to the other new family member, Jacida Hortz. Let's go. Okay, Jacida. And just make sure, folks, for all you guys that are signing up and joining here and all this stuff, make sure that you are in the live room tomorrow, 8 a.m. if you can. The earlier, the better. I'm telling you, this is it's a global community. I've signed up people from Nigeria, Finland, Ukraine, Canada, UPS guy. Like, I mean, there's people that work all around in different industries, and it helps us get a good view of what's happening out there, right? Like as a community, remember, we're trading as a unit. We're trading as a team. We're not doing this Rambo solo type of trading, like lone wolf kind of thing. We're all working together. Now, it's good to have different opinions, but ultimately, I'll tell you, just never go against Matt. Never trade against Matt. Don't even think about it. It doesn't work. So Matt is ultimately, the main guy. He has all the experience. He's always been helping, not just his members, but, I've learned a lot from him as well. Things that you're not going to see anywhere out there, really, because, I mean, keep in mind, you are talking to a chief market strategist, right? You're not talking to some self-taught retail trader. You're talking to somebody that's been in the game, who knows how it works in and out, and has been in there. I think he was trading before computers existed, like in the late 80s. Like, I don't think there were computers then. I don't know, but he's been around all this time. And the fact that he's still doing good and he's still out there, that already is that verification, confirmation stamp that I'm looking for. Whenever you're looking for an instructor, whenever you're looking for a mentor, an educator, somebody that can help you improve your trading, right? Maybe you're doing it all wrong. Maybe you need a little bit of help. Maybe you need a lot of help. I don't know how your account is doing. We don't ask for that information, but I can tell you for sure, if you're not happy with what you're doing right now trading, maybe it's time to join the room. Like, find a community, a real community. None of that like cheap Discord, Wall Street bets, stock twits, none of that stuff. You trust me, that's only going to hurt you. Hedge funds are actively looking what retail traders are doing so that they can short those stocks and they can mess retail traders up. So don't ever go to stock twits and trade what's trending out there. Okay, that's a short list that they use. My suggestion is to trade the macro with Matt. We're trading the NASDAQ, we're using triple leverage ETFs, we're buying calls or puts, but we are not doing credit put spreads, condors, covered calls. We're not doing anything complex. We're doing the most simple type of options trade that you can do, which is buying a call and buying a put. So we have a couple questions here. All right, good old Matt. Yeah, so this is annual. CJ Marquez, good question. Is this for options only? We focus on options, but you can ask Matt anything you want. You can ask him about any individual stocks. It doesn't matter, really. I mean, just pick pick Matt's brain. You can ask him anything you want. All right. Yeah, and really important. Keep in mind you're getting 4 calls a week with Matt, the chief market strategist. But that is if you sign up today. Like typically, if you would have signed up for the chat room 2 weeks ago or 3 weeks ago, you do not have access to these additional calls that are Monday, Wednesday, Friday, because this is something that we're only doing for today because it's the last seminar of the year, right? We've gone quite a way with these chat rooms. They've changed the game for a lot of traders out there, and it's definitely great. Matt loves it. Matt loves his community, his members, and there's some good relationships there. There's some great people. I personally have met people from the chat room in person, and I know a lot of the people that are signed up as well. I can tell you it's a great community. These are great people, great individuals, people that love to trade, people that love to learn and all that sort of stuff. So with that, I think we can wrap this up here. I want to give everybody a big thank you for being here, being part of the session, for joining. For those that did join, just make sure that you are there tomorrow in the morning so that you can take full advantage of the trading day with us. Tomorrow is Wednesday, I think, so we still got the whole week left. And you want to make sure you start 2023 with the right mindset. You want to start with the right mindset. You want to really know if you have a plan, strategy. But if you don't have a plan or a strategy, the best thing that you can do, because learning is not a one-day thing, the best thing that you can do is mirror somebody that is actually good. And I don't mean just good. I mean like 40 years in the game, verified professional trader, analyst, out there all over the news, literally global. Like he's on even news in like Asia and Europe. It's not even just the US. So that's what I would look for. That's my suggestion. I hope that all you guys, do well trading. I know that if you join the chat room, there's a much higher chance of that. Any questions, if you have them, you can contact me. My info is there in the chat. Big shout out to everybody. I hope I can see you guys in the chat room. So everybody stay safe. Have a great week. Make sure you're trading with a plan, trading responsibly. And if you have questions on joining our great community, you already know where to contact. All right, folks, everybody have a great day. We'll see you in the chat room tomorrow.